When you think of accounting and finance, what comes to mind? Don't worry, this is not my course. I have something just a little more special planned for you. Do you want to learn about accounting and finance in a way that you've never been taught before? Of course you do. My visual approach will teach you everything you need to know, and it will be a lot of fun. In fact, you'll wonder why you weren't taught this way in school. Oh, and if you get a moment, please check out the student reviews to see how so many people have enjoyed the learning experience. And you know what the best part is? No experience is necessary to take this course. So if you don't know how to model and value a company, analyze a cash flow statement, or understand the difference between growth and value investing, not to worry. We will cover all of those concepts from scratch. So why should you learn accounting and finance from me? I have an MBA in finance from Columbia University. But more importantly, I have work experience in the real world, from Goldman Sachs to several hedge funds, to venture capital and consulting firms. I've raised and managed over $1 billion in my career. Now I'm passionate about sharing my knowledge and experience. My life has turned full circle, from my own education to my experience in business, to investing in and founding several companies. Instead of teaching boring finance and accounting theory, I teach based on my own real-life practical experience, and it has led me right here to you. I want you to understand how to create, analyze, and forecast an income statement, a balance sheet, and a cash flow statement. I want you to thoroughly understand and enjoy finance and accounting so that you can be inspired to achieve all of your career goals. I have the tools needed to get the job done. So let's do it. I'll see you in class. Good morning and welcome to our 99th weekly webcast. If this is the first time you're joining us, welcome. If you've been with us before, welcome back. And so the way the call works is it's 3 hours long, and I answer the questions in the order in which I receive them. You can ask me business questions, personal questions, career questions, anything you want. This is an AMA, like Reddit's AMA. And so the call will be transcribed within 24 hours. So what my team does is within 24 hours of this call being concluded, they actually type up the entire call and all the questions. So you can go to the description field in YouTube so you can automatically jump to the question you're most interested in so we can save you time. All right, so without further ado, let's begin, and thank you. Thank you. Just a heads up, we do have class, or I should say a webcast next week. It's number 100. It's a big deal because it's a big round number. However, for the first time ever, the 2 weeks after that, I'm taking vacation. Not the first time I've gone on vacation, but the first time I'm taking 2 weeks off from the webcast, yeah. All right, thank you. All right, so the first question here is from Hans. Hans is saying good morning, and I'm smiling, Hans, because I see your icon there, the image there, and that's the cover of an album called Atom Heart Mother from Pink Floyd, which I love, especially the song If. So you wrote here, good morning, and I mentioned that last week too. Good morning, Chris. Can you explain to me how the value of bonds can change if the interest rate and loan amount is fixed at the start? Yeah, it's a great question. And you wrote in brackets, P.S. I love that you're also a fan of Atom Heart Mother. Thank you. Awesome. Yeah. So basically, the way that bonds work is a bond is basically a government loan or a company loan or a loan from an entity. And so whenever you hear the word bond, think of it as somebody else getting a loan. So when you buy government bonds, you're giving the government a loan. And so when the government, and I've got some props here. Let me grab an example over here. Give me 1 second. All right, that took me a while. All right, so this here is a Russian government bond. And let me show you what this is for. This here was made in 1916. It's written in Russian, duh. I don't speak any Russian. And you know what it was for. It was for to fund World War I. And so here's what it looks like here. This is the amount of rubles. This is the date. It's 5.5%. You see that? 5.5% bond. And so what that means is you get, if you invest, say, $100 in this bond, you get $5.50 every single year until it matures. Okay, so $5.50. Now let's pretend that back in 1916, when the Russian government issued this bond, that interest rates in general were 5.5%. So they issued this bond to you. You spend $100 to get it, and you get 5.5% return every year. Okay, in the form of coupons, which look like this. The reason they call them coupon bonds is because people used to clip these little coupons off. And quite often, it's every 6 months you get to clip off a coupon. The total amount for the year in 1916 would have been 5.5% in coupons, so $5.50 on your $100 investment. Now, let's say that interest rates, let's say what happens is all of a sudden, for whatever reason, interest rates go up to 10%. And you want to sell this bond. Well, no one's going to buy it from you for $100 because they can get a better return on their money by putting their money in the bank because they might earn 10%. And so what happens is this bond, you can't sell it for $10 anymore. It's worth less. So you're going to sell it at a discount, meaning less than $100. And let me give you the opposite example. Let's say interest rates in Russia, for example, in 1916, and you get these on eBay, by the way, they're really, really cheap. All these props, it's fun. But let's say in 1916 in Russia, you got this bond, you paid $100 for it, and the interest rate was 5.5%. Just pretend the interest rate was 5.5% everywhere, just like it is in this bond. And then for some reason, interest rates in Russia dropped to 1% in 1916. Well, you could sell this for more than $100. So what you would do is you'd sell it at a premium. Okay, and so that's why bond prices move up and down inversely to the change in interest rates. And so what happens is, and I've got some props here to teach you how interest rates change. All right. It's all right. A bunch of stuff followed. This is the absent-minded professor, okay? Don't take my courses, I'll confuse you. Just kidding. All right, so the way that governments change interest rates is as follows, okay? So I'm going to pretend that I'm the American government, okay? Let's pretend that this is an American bond. And what I want to do is I'm a doctor. So think of the American government when it comes to finance, or any government that is. Think of the financial officials that work for government as doctors. And what these doctors do is they do whatever they can to make the economy better. So there's two medicines they use. One of them is called fiscal policy, and the other is called monetary policy. And so if the economy is not doing well, the government can cut taxes. That's fiscal policy. Or they can issue stimulus checks. That's fiscal policy. Okay. They also can change the policy of money, which is called monetary policy. And monetary policy means making the value of money go up or down. Now, before I bring out this fake money and this bond here and explain how it works, if you go to a grocery store and let's say you buy avocados every week at the grocery store and they're $1 each, and then you go to the grocery store one week and they're $4 each, and you're like, oh my gosh, what's happening, dude? And so you talk to the manager at the store and you're like, hey, what happened? You know, these avocados used to be $1, now they're $4. What's up with that? And the manager will tell you, oh, what happened was there was a drought. And unfortunately, the price of avocados is much, much higher now because not that many avocados are being produced, which makes sense, right? So when supply goes down, the price goes up of anything, usually. So the manager of that grocery store is the Federal Reserve, okay, which is basically a government official, or a group, I should say, within the US government that decides how many avocados to put out there in market, or how much money, I should say, same thing, sort of, they're both green, to put out there in the market. Okay, so that the person in charge of monetary policy in the United States is called, or the entity is called the Federal Reserve. In other countries, it's usually called the Bank of something. So in Canada, it's the Bank of Canada. In Europe, it's the ECB, the European Central Bank. Central just means a big bank. And in other countries, it's like Japan, it's the MOF, the MOF, Minister of Finance. Okay, let's talk about how interest rates change now. So let's say that the government in Russia, what they want to do, and this is from 1916, I'll use Russian example again. They want to issue bonds. And the use of proceeds for this bond, and remember, this is just a loan, the use of proceeds is going to be to finance World War I. This is a real bond from 1916. So what they would do is they would sell this to you. Okay, you're the consumer, I'm the Russian government. They would sell this to you. This is your money, okay, fake money, and you give it to me. And I'm the government, and I give you this. Okay. I'm taking all this money out of circulation. I'm going to use some of it to buy tanks and all that stuff to defend Russia in 1916. And I'm also going to take some of it out of circulation. So all of a sudden, there's less money out there. And just like with the grocery store, when there were fewer avocados available, the price of avocados went up. So now that there's less money out there because I took it out of circulation, the price of money goes up, meaning interest rates go up. That's how it works, okay? And so when governments want interest rates to go down because they're freaking out and they want to improve the economy by making access to money easier, then what they do is this. This is yours, remember? This is your bond. I'm the government, okay? You're a consumer or an investment firm. I'm the government. What I do is I buy this back from you and I give you money, fake money here, okay? So you get this money. And now all of a sudden, there's more money out there in society. Just like with the grocery store, when more avocados are being produced, the price of avocados can go back down because that drought is done, hypothetically speaking. So there's more money out there. And what that means is interest rates go down. The price of money goes down. And so the bottom line is that governments can think of the government like a doctor when it comes to finance stuff. And they have two types of medicine. One is fiscal policy, which is the policy of cutting taxes or issuing a stimulus check to make the economy better. And the other medicine, the second of two medicines the government has, is monetary policy, which is the policy of money. And this is how they change interest rates. And it's fascinating. All right, that was a great first question. Thank you. Great to have you, Hans. All righty. Next up, question is from Heb. You'll notice, by the way, I'm looking directly at you guys when I'm reading the questions this week. I'm trying to push the goalpost out and make the experience a little bit better for the customer, you the student. So you can see here, it's tough to see, but I've got this prompter thing, and I can see and read every question directly here. So yeah, and a lot of politicians don't use prompters correctly. When you use a prompter, you're not supposed to read every word, and you're supposed to look every now aside. Certain politicians, you know which ones I'm talking about. There's a teleprompter on both sides, and they're not very natural when they turn. So Trump goes like this. Not a political criticism, maybe, although maybe a cure for corona is coming this November. So he faces here, and then he faces here, like that. Yeah. So anyway. All right, so the question is, which place is better to migrate to, United States or Canada, if I'm looking to get into real estate? Yeah, so it all depends on location. So my dad taught me when I was younger about real estate. He said the three most important things to look at when it comes to real estate are location, location, location. So it's hard for me to generalize and say that Canadian real estate is a better investment than American real estate. It all depends where. You know, if you're up in the Northwest Territories in Northern Canada, in Yellowknife, which is the coolest name ever for a capital, the price of real estate is low because demand for property there is quite low. If you're buying downtown Toronto, it's going to be more expensive. Location, location, location. Same thing in the United States. If you're buying Manhattan, it's going to be expensive. But if you're buying in Iowa, it'll be a bit cheaper. And if you haven't seen Field of Dreams, the movie yet, you got to see it. And remember that one line: "Is this heaven? No, this is Iowa." Yeah. So it all depends on the location. All depends on the location. Now, the difference between the Canadian financial system and the American financial system is that the Canadian banking system is very regulated. You just have a handful of banks, like 5 or 6. And they're very well capitalized. I don't think they take on as many risks as some of the American banks, because in America, there are like thousands of banks. It's unbelievable. There's so many banks I've never heard of. In the United States, you're allowed to, and this is not the case in most countries, but in the United States, if you buy a house, you're allowed to deduct the interest on your mortgage. So you pay a lot less in taxes. Just like with your retirement savings programs, the amount of money you put in your retirement each year gets taken out of how much tax you have to pay. It's a great tax incentive. And so in the United States, there's a certain dollar amount, and they keep making it a bit smaller, but it's still massive, that each consumer can use to buy a house. And it's problematic sometimes too. I mean, the American dream is to be able to buy a house. I believe in that, obviously. But it leads some people to take on too much debt and to get mortgages, which are basically loans from banks for houses, to get mortgages that are interest only, meaning you're not paying down the principal. And so it's kind of problematic. And in 2008, when we had the real estate crisis in the United States and globally, it hit America a lot harder than it hit Canada. Because in America, you can write off the interest, again, on your mortgage, but you can't do that in Canada. Yeah. So those are the major differences, I would say. Yeah. All right. Next up is Shabam. Hey, Shabam is saying, "Hey, Chris, hope you're doing well. Likewise. Can you tell us a bit about how your life was in your early 20s? Yeah. Oh, to be in my early 20s again. And by the way, statistically, it's a fact that the average lifespan globally is 26 years younger today than it was in the 1950s. So that means that you're all 26 years younger than you think you are. So yes, you can start over at any age. It doesn't matter. If you're 46, you're actually 20. Okay. So I'm in my early 20s then, right? I'm actually 48. So let's assume 48 minus 26 is 22. I'm 22 years old right now. Okay. So my life in my early 20s was, I was insecure. I cared what other people thought about me. And I did things career-wise because I wanted approval. And a lot of people do this. And my parents never put pressure on me. They're the best. But I wanted to, I don't know, I wanted to accumulate stuff. And like, I don't know why, but money was incredibly important. Like, don't make money your God. Otherwise, you'll never be happy. I promise you. Because if you chase money, you'll lose your dreams and your money. But if you chase your dreams, as long as you're willing to fail at least a couple of times, and please fail at least a couple of times. But if you chase your dreams, I promise you, eventually they'll come true if you fail enough times. And please fail enough times. Okay, because as Michael Jordan aptly said, and I've got the poster down there, I've failed over and over and over again in my life, and that's why I succeed. Back to my 20s. So I was insecure, and I was nervous. I was nervous a lot. And I got a job at Goldman Sachs, and I went down there, and I was really I thought they made a mistake hiring me, although I worked my ass off. And I remember during the training program at Goldman Sachs, I didn't say anything for a long time because, and I had that song then from Nirvana in my head. Remember the acoustic unplugged version they did on MTV of that great album, best album ever. I had that song "Dumb" by Kurt Cobain. And I thought to myself, if I don't say anything, people will just think I'm dumb. But if I say something, people will know I'm dumb. It's true. It's true. I was insecure, and I care what people thought about me. I don't know. I mean, it might have been because when I went to school when I was younger, in the 6th and the 8th grade, the teachers at a certain school, which I'll never mention ever, and I'll never go back there to guest lecture, but the teachers thought I had a learning disability, and they destroyed my confidence. My parents were awesome. They fought tooth and nail for me. But I remember I got sent to a place called Chisholm, which is on Lakeshore Road in Oakville, Ontario, to test see if I had a learning disability. But the issue was I wasn't passionate about what I was doing. And I believe that the role of a teacher should be similar to that of a parent, in that your number one responsibility in your students or your kids, so to speak, is to build their confidence. Because if you build up their confidence, they can achieve anything. Anything, yeah. So I was insecure. And I think that into my 20s, that whole, but I'm glad it happened. Like in hindsight, I'm glad that they thought I had a learning disability. And by the way, if somebody's just diagnosed with a learning disability, it makes them work harder. Like there's a lot of people that are dyslexic that work their asses off to compensate for that. And they're more successful than people that are not dyslexic. Like John Chambers, who's chairman emeritus and used to be the CEO for 17 years of Cisco, ticker CSCO. The same thing with, I think, Elon Musk as well. And also Steven Spielberg. He was diagnosed with dyslexia. If you're told, and I got this, by the way, from a great book you got to read called Outliers by a guy from Toronto, represents where I'm from, a guy from Toronto named Malcolm Gladwell. But in hindsight, it actually helped me because it made me want to work much, much harder and prove the world wrong. And that's a good segue into venture capital. And by the way, these props here, you'll see right here, I've got Venture Capital Boot Camp. What I'm doing in my MBA degree program this week and next week is I have a boot camp for my students. And it's a little silly, but it's kind of fun. But I've done a lot of venture capital work, and I've been on boards at boot camps and helped out with that sort of thing before, and invested in companies from 500 startups, et cetera. So that's what I'm doing that for. But in venture capital, like there's this brilliant man named Doug Leone, and he is the most senior partner at Sequoia. And when I worked in venture capital before, we partnered with Sequoia. It was great. And I got to spend an hour and a half one day with Doug Leone. And I asked Doug, I said, Doug, why are you so successful? They're literally like 500% more successful than the other top 10 venture capital firms on the planet. 5% of Sequoia's investments become unicorns. That means $1 billion company. Whereas the other top 10, it's 1%. But I asked Doug, I said, Doug, tell me why. Why is it you're so successful? Please. And he was really nice about it. He's this older guy from Italy. He's ripped, he's big, he's strong, good dude. And he told me this, and I'm going to paraphrase it, okay? I'm not going to do it justice. But he said, we like to invest in great management teams first, right? If you go to sequoiacap.com, their website, you'll see they don't profile the companies. They profile all the great entrepreneurs. And I said, well, what kind of people do you like to invest in? And he said, well, we like to invest in people that maybe something happened to them earlier in life. I don't know. But whatever it is, they just want to prove the world wrong. They want to put their dent in the universe, so to speak. And there's plenty of examples of people that wanted to prove the world wrong. You know, like that book I mentioned, Outliers by Malcolm Gladwell. A lot of people were misdiagnosed or were told they're not good enough. And these are the best types of people to invest in. And so if you're younger and somebody has told you you're not good enough, awesome. Because you're going to work harder and prove the world wrong. Because those people that diagnosed you are wrong anyway. But by investing in people that have been told there's something wrong with them or whatever, or maybe they're insecure, whatever, it makes them prove themselves to the extent that they don't start a company just to make $1 million or sell it for a couple of million. They want global domination. They want to put their dent in the universe. They want to prove the whole world wrong. The whole world wrong. And there's plenty of examples of this. So Elon Musk, and this is publicly disclosed in his biography, Elon Musk, as a kid, the poor guy, he was beaten up a lot in South Africa for being different, right? Not cool. And so the guy's thinking about colonizing Mars now. That's how long-term focused he is. And as Warren Buffett said, the longer the view, the wiser the intention. And there's plenty of other examples of people like this. I don't want to name specific people I've invested in, but there's also Steve Jobs. So Steve Jobs, God bless him, he's no longer with us, obviously. He was adopted, and being adopted is a beautiful thing. But he had issues with who's his father, and maybe I want to meet my dad, that sort. He just went up, and then he got let go by the Apple board in the late 80s, right? The board of Apple Computer foolishly fired him. And so he wanted to prove the world wrong. So he's thinking to himself, what's next? And so he started this great company called Next. And then eventually he came back to Apple. And, Apple was within 24 hours going belly up. And he turned the company around. But he had something to prove to the whole world because, damn it, those board members took his company away from him and they fired him. Okay, so he had something to prove. Okay. Now, to wrap up this question about my early 20s, I want to talk about a chart that I think is going to change your life. Now, let me get a board here. Okay. And what I'll do is I will turn this way here to my oldest but most favoritist camera. Favoritist. Mom, don't correct me if you're watching. Okay. So I'm going to show you a chart that's going to change your life. This here is your age. Okay. This is your age. Young, old, like me. This here is give a damn. Okay. Care a lot. We don't care a lot. Like Care Bears. My little sisters had Care Bears. I remember that song now. All right. So this here is time, your age, and this here is give a damn. When you're younger, you're down here. You don't care what people think of you. Maybe you're in a restaurant with your parents, you have a meltdown, whatever. You just don't care. You don't care. When you're older, old people don't have confidence problems or as much. Okay, you just don't care. You don't care, and it's liberating. The problem is in between. In your 20s and maybe 30s and maybe teenager, whatever, you're up here, or at least I was in my early 20s. You give a damn what people think. And it's a dangerous way to live because you'll never be happy because you're trying to impress everybody. And I call this here, I should trademark it, the triangle of despair. You need to avoid this, okay? I don't want this to be part of your life ever. So how do you avoid this? Well, before I tell you how, I want to mention that a lot of entrepreneurs that are very successful, and anybody successful in the music industry, sports, whatever it is, they've always lived here for the most part. They don't give a damn what people think of them. Think of an athlete. There's billions of people potentially watching them play on the field. They don't give a damn what people think. And if they thought about what people think of them, they wouldn't be able to focus and be productive. Same thing with rock stars up on the stage. They don't give a damn. A lot of them will break their guitars like those great old heavy metal bands. They don't care, man. They don't care. So, and the best entrepreneurs are here too. They just don't care what people think. They don't care. They're going to march to the beat of their own drum. I want you to live at this level, okay? Always. I don't want you to give a damn what people think of you. I'm not telling you to be rude or disingenuous. I'm just telling you to be you. Isn't that great? Isn't that liberating? Just be you. So how do you avoid this triangle of despair? Well, it's a really simple exercise that I want you to do today, please. What I want you to do is I want you to get a piece of paper and I want you to write down on it this. I don't care about X. Okay, so I don't care about and then underline. And write that 10 times. And then I want you to go on a long walk because when you go on a walk, you release endorphins. And helps you think more clearly. And Steve Jobs, with his buddy Larry Ellison, used to go on long walks together. And Steve Jobs even went on long walks with Walter Isaacson when he wrote that epic book about Mr. Jobs. Helps you think better. Go on a long walk, and I want you to fill in the blanks for those 10. I don't care about X. I don't care what people think of my clothes. And by the way, this is from a case study we're doing on Tony Shark. He's a pretend dude that started a company called Shark Virtual Reality. He's in a lot of my courses and my MBA degree program as well. So I don't care what people think of the fact that I think I'm Tony Shark today. And you got 9 more. I don't care the fact that people know that I dye my hair and I do just the worst job ever. I just like to, I don't know, it's just what I want to do. I don't care if people think that I'm juvenile because I have virtual reality products here. For a case study I'm doing. I don't care if people think I'm juvenile because I play video games. I do, a lot, and I love them, and I'll never change. Right now I'm hooked on The Last of Us Part 2. It scares the crap out of me. I have to play with the lights on. Great game though. I love it. Yeah. So I don't care. I don't care that people have criticized me over the past 3-4 years or so about being a teacher. I don't care that people in the venture capital industry or the hedge fund industry call me, and they've stopped doing it recently, but they used to call me a lot and say, are you coming back yet? you want to come back to work? Are you done with this little teaching thing? No, this teaching thing is bigger than me. I just want to teach. 50 Cent said, I want to get rich or die trying, but for me, I want to teach or die trying. I just love it. I absolutely love doing this. I found my passion. I found my raison d'etre. And I want to help you find your passion and purpose in life too. So Mark Twain had this great quote. He said, the two most important days in the world are number one, the day you're born, and number two, the day you find out why. What's your why? What's your purpose? What's your path? And if I can humbly help you to start over again in your career, then I've done my job. I want you to do what you were meant to do on this planet. And I want you to keep searching for that until one day you wake up and you're like, oh my gosh, I'm not getting up to go to work. I'm getting up to do my passion, what I love doing. Once you have that feeling, you'll never be the same for the rest of your life. It's kind of like this. So when you hold your child for the first time, whether you adopted a beautiful baby or you have it naturally, the first time you hold your child, you feel this insanely great amount of euphoria, happiness that touches your heart. It's like lightning in a bottle. And you never knew you could feel that way before. It gives you a sense of purpose to parent. It's the same feeling when you do what you were meant to be doing on this earth. Not as good, because kids are more important, obviously. But it's that same butterflies type, oh my gosh, I didn't realize I could be this happy feeling. Until you have that feeling, you need to keep searching. And once you unlock that level up, so to speak, using a video game reference, and you feel that way about what it is you're doing, then that needs to be your career. Okay. All right. Next up, Shubham is saying, to what extent should a CEO know about finances? Yeah. What is the stuff that the CFO is taking care of, and what are the major parameters presented to the CEO? Yeah. So I think that all CEOs need to have a very basic understanding of accounting and finance. And accounting and finance, it's not common sense. Like a lot of business is common sense. You have it or you don't. But finance and accounting is not. You really have to learn the basics. And I have a lot of finance courses that you can take on Udemy. Just search for my name on Udemy on finance courses, whatever. And I teach it to you in a way that's intuitive and fun. And by the way, I got a D in accounting when I took it for the first time at McGill University. I'll never forget it. It was terrible. I thought my life was over. And I had to take it again. And I got a little bit better, maybe a B or a C, I can't remember. But the reason I got a D the first time was because I was memorizing accounting and finance. You can't memorize stuff in the real world. You have to understand it. And once you understand it, then you'll never forget it. And so in my courses, I teach you with a lot of props, how finance works in a fun way. Now, in terms of what a CEO needs to know about finance, a CEO should probably really focus on revenue. And the most important financial statement item is revenue, which is sales, which is the same thing. And that's at the very top of the income statement. That's why they call it the top line. What's your top line growth? The bottom line of the income statement is profits, right? And profits, that's why they say, what's your bottom line? That's profits. So the CEO should focus on revenue along with the head of sales and do whatever they can to grow revenue as fast as possible. And a CEO is a great salesperson. That's how they made CEO. And they help to close big deals. It's true. If you get to the top in any company, even if it's a partnership like a law firm, it's because you're a great salesperson. If you're a partner in a consulting firm, you're a great salesperson. And salespeople should focus on sales, the top line. So that's CEO. The CFO should focus on everything else. So CFO focuses on keeping expenses low, and the CEO focuses on revenue. It's that simple. It's that simple, yeah. And early stage companies don't have CFOs because they don't have any revenue, or the financials aren't really that complicated. All right. Next question is, Shubham is asking, what would what would be your basic investment tips for people joining the workforce? For example, having almost no net worth and living off a modest amount of pay. Yeah. So I would say that when you enter the workforce and you get your first couple jobs, you got to find a mentor or multiple mentors to help you out in that company you're going to. And do you remember the first 2 weeks of high school or undergrad, whatever? Those first 2 weeks, you made a ton of friends. And you still have those friends today. For some reason, you're the new kid in town, and a lot of people are the new kids in town in the first 2 weeks of school. And so you tend to bond then. And those are friends for life, usually. The same thing when you start at a new company. You're the new kid in town, and everybody wants to help you. They do. So when you're the new kid in town, when you start a new company, I want you to seek out mentors. And I want you to set up breakfast meetings or coffee meetings with a lot of people in that company. Because you might not understand the corporate culture of that company and how stuff gets done. And so I think that mentors should also be assistants. You should also get assistants to mentor you. Why? Because that assistant, for example, has worked with your boss probably for decades. And they know how to get stuff done. And because most people don't seek out mentoring from assistants. I think it's the right thing to do. And obviously you got to be nice to everybody in the company, especially assistants, because they talk to their bosses. Yeah. But you know what I'm getting at. So I want you to get mentored by assistants as well and people in different divisions. And what I also want you to do is I want you to just kind of observe how the culture works before staking your mark or claim, so to speak. Right? Every company is different, and every board I've been on is completely different as well, different culture-wise. So don't be too proactive. I know it sounds out there for me to say that. In the first couple weeks or so, just kind of observe how things work and how things get done, because every corporate culture is a little bit different. Okay. The next question is, what is the most important thing I should do as an employer in order to retain my employees? And then you wrote, P.S. This has nothing to do with my previous question on asking for a raise. Yeah, okay, cool. Yeah. So again, the question is, what is the most important thing I should do as an employer in order to retain my employees? Yeah. It's not just about money. Like, that's a big misconception. Obviously, you want to pay your people well, but you also want to have them as part of your family. It's true. And you want to mentor them and grow them as well. And if you treat your employees extraordinarily well, then they'll treat you well as well. It's a symbiotic relationship, and they'll work extraordinarily hard. Like, the difference between an average engineer and a great engineer, programming-wise in Silicon Valley, is literally 10x of performance. And you got to make the environment fun. Like in Silicon Valley, there's video games and a lot of the offices, Nerf guns, whatever, ping pong tables, foosball, etc. Treat them well and treat them like their family and treat them in a way so that work is actually fun. Because if you whistle while you work, I know it's a cliche, but if you enjoy doing what you're doing, you'll be productive, really, really productive. And I never hire anybody that sees it as a job. I hire people that were born to do this, that are passionate about what they're doing. In my case, it's education and changing the world by providing education to everybody in the world for next to nothing if I possibly can. So other things you can do to motivate, and I have a course on Udemy called How to Motivate Employees. Other things you can do is you can provide a lot of bonuses, okay? Meritocracy-based bonuses. Okay, and I know I'm kind of shying away from money, but hear me out on this side of it. The amount of money people make, it should be a meritocracy. You eat what you kill. I know it sounds harsh, but it should be a very simplistic mathematical formula. So if somebody works in sales and they surpass their quota, they're making 10% of however much stuff they sold or whatever it is. If somebody does not work in sales, they still get a cut of what the company sells, right? And they can calculate it perfectly. And so I have some employees of mine for some of my courses that they get 50% of the revenue on certain courses. Others get 20%. And they know every day what the daily P&L is, or profit and loss statement for them. They know what they're getting compensated, right? And then I always help out and give a little bit more, whatever. It's just who I am. Yeah. So that's that. Oh, another thing is this. The best way to demotivate somebody and pollute and destroy your corporate culture is to criticize employees publicly. I learned this from Godfrey Sullivan, who is the CEO of a great software company called Splunk. He used to work at Apple and Hyperion as well. And Godfrey once said that you always want to praise in public and criticize in private. And so if you want to provide feedback to your employees that's negative, obviously do it delicately and only one-on-one, because there's nothing worse than being berated or talked down to by a schmuck you work for. Yeah. People don't forget that. Like, I remember I worked at Accenture years ago. It's a great company, but there was somebody that managed me that should not have been managing people. And I'll never name his name, it's killing me. He was from the Orange County office. He was an associate partner. And it was late one night, and I was green. I just started. And it was 10 p.m., and we were on our client site, which was Manulife. And we were working then on the merger of Manulife and Confederation Life on Jarvis Street in Toronto. I remember that. And he asked me to print out a report from a database. It was 10 o'clock at night. And I didn't know what the hell I was doing, man. There's all these fields everywhere, primary keys. I don't know what the hell that stuff meant. And so I tried, and I couldn't do it. And I thought if I kept messing around with it, I'd break it. And so I went up to him like an hour or two later, whatever it was. And I said, I'm so sorry. I tried to do it. I tried to fix it or to print out the report. I just can't figure it out. And he looked at me and he said, it's because you're incompetent, right? And there's other people around. And then he walked away. And I was like, oh. And I'm so grateful he did that, because it motivated me to start my own company. So if you're frustrated at work, it's a good thing. Embrace that frustration. But that's how not to manage people. You never criticize in public, only in private. All right, next up question is, where do you think we should draw the line between ambition and being realistic? Yeah. You can never set your goals high enough. Never, ever, ever. Okay. I want you to only hang out with people that are also incredibly ambitious and positive thinkers. I want you to cut off everybody in your life that's negative. They serve no purpose in your life. They bring you down. And it's up to you to decide how to kind of create your environment, so to speak. You know, just like listen to music, you set the soundtrack for your life. If music motivates you during work, whatever, then always keep it on if you can, you know, on a headset, whatever it is. But I think that ambitious people motivate each other to be much more ambitious as well. So what I would say is, I got to quote James Cameron. So James Cameron is this wonderful director, writer, producer on great movies like Titanic, Avatar, etc., Terminator 2 and 1. And what he said is this, and I've got a prop down here for one of my courses. What he said was this. He said, you need to set your expectations and your goals so high, and this is fake, it's for one of my courses, I'm a fraud. I love props. You got to set your goals so high that if you fail, you still fail above everyone else's expectations. I thought that was pretty cool. So I would say that you can't, give me 1 second here. I got another keyboard here for my non-production machine here. There you go, good. You got to set your goal so high that you grow into the person that can accomplish or achieve those goals. So I don't think you can be ambitious enough, as long as you're not ambitious to the extent that you're chasing money, because money is the root of all evil. I get it. We need some, obviously, to live. But there's got to come a time in your life eventually when you say, I'm not chasing money anymore. I just want to chase my passion. And I want to change the world and enhance the lives of others. I want to serve other people, my customers, my students, and humbly help to make their lives better. But don't make money your God. Don't do that. It's one of the 10 rules we have to live by, which is part of the Old Testament, which is the basis for our modern legal code. And the Old Testament's the basis for a lot of great religions as well, right? So our forefathers and foremothers knew thousands of years ago. Those 10 rules are a great way to live your life by. Yeah. Especially don't work 1 day a week. Yeah. But don't make money your God. Don't do that. Otherwise, you'll never be happy. Because there's a lot of really miserable people that work on Wall Street and they make money their God and they're never happy and they can't get enough of it. And they're always pissed off because somebody makes more than them. But the only time you should look in your neighbor's bowl is to see if they have as much as you, if not more. Make sure they have enough. We're all in this together. Don't make money your God, please. Yeah, but you can never be ambitious enough, right? Okay. Next up, congratulations on number 99. Thank you. That reminds me of Wayne Gretzky. This is our 99th weekly webcast. You wrote, I can't wait to celebrate 100 with you. And then you wrote, thank you very much for everything. I would be elated to meet you sometime. You're an amazing, thank you, person. God bless you way more. God bless you. Thank you. Thank you. This is fun. And thank you for being here, please. You're my students. And without all of you, this would not be possible. Yeah, thank you. Okay. And speaking of Wayne Gretzky, he's the best athlete ever. I'm Canadian, so yes, I am biased a bit. But the reason Wayne Gretzky was successful, and this applies a lot in business to what I'm about to say, is because he said, I wouldn't skate to where the puck is. Rather, I would skate to where the puck is going to be. And just like in business, or when you invest in the stock market, don't buy stocks or invest in companies that everybody else loves, because who's the incremental investor to push that stock higher? You need to invest in companies that people are going to love, kind of like skating to where the puck is going to be. Okay. I can't believe it's week 99, though. Amazing. Things are getting better. Yeah. All right. Technology-wise, but I still make mistakes. Kim is saying, what's the difference between an ETF and an index fund? Yeah. So an ETF means an exchange-traded fund. And I've vlogged a lot about this, and you could search my YouTube page. I don't ever want you to buy mutual funds because they're a scam. That's right. They're a scam because their fees are insanely high, and they're hidden fees too. You pay more taxes too, because mutual fund portfolio managers, what they do is they buy and sell quite often all year long, which means that you have short-term capital gains. And governments, almost every government on the planet, they encourage you to think longer term. And if you make money and realize a profit in more than 1 year, you pay less taxes, less capital gains. Mutual funds, sometimes, not all of them, but a lot of them are very short-term focused. And so a mutual fund, also 90% of them underperform the S&P and ETFs and indexes. So let me dive down deeper into ETFs, and I'll show you exactly what this means here. And let's go here to browser. Is it working? Good. Okay, great. All right, so let's go here to finance.yahoo.com. So when you buy a stock, you enter a ticker, like Twitter and these other, Dell, etc., okay, Bank of America. When you buy an ETF, it's like a ticker as well. So here's an example of an ETF, and let me do one for a precious metal first. This here is an ETF for gold. And this basically means that this exchange-traded fund, this is a one company portfolio, and I'll build on this in a second, Kev. This is a one company portfolio that's very liquid. It trades a lot. Okay, you need to make sure that stocks trade a lot. Otherwise, you become a stockholder and illiquid stocks own you in a down market rather than vice versa. So if we go here to the profile of this ETF, okay, we see here that this ETF for gold, GLD, is 0.4%. So that's the annual fee you're going to pay. Now, if I look at, so this is an ETF. This is not an index though, okay? This is just an ETF for a single commodity. Let's look now at an ETF that's also an index. Now, an index is a collection of stocks that represents a country's market or a stock exchange. So there's this one index everybody knows about, which is called the Standard & Poor's 500 Index. And the Standard & Poor's 500 Index is 500 stocks that represent the U.S. economy, so to speak. And there are 500 stocks that have market caps over $8 billion, and there's other mandates they got to adhere to as well. So you can also buy that S&P 500 index. Okay, so this is an ETF that's also an index right here. And what we see here, and the first thing we check here is the volume to make sure it's liquid enough. Good. Then what we do is we look at the profile here and go to Yahoo Finance only. Don't pay for any finance software, please. I used to spend thousands of dollars every month in my hedge fund on Bloomberg software. You don't need that. You can get everything for free from Yahoo Finance. Okay. And I'm not sponsored by anybody ever. And never take anybody's opinion on what to buy or not buy. Always do your own homework because everybody's biased. And no one's smarter than you. You can do your own research too. Okay, so right here we see the annual expense fee is next to nothing. It's 0.09%. And you can own all 500 stocks that represent the US economy. It's a great deal. It's better than buying a mutual fund because mutual funds underperform indexes. 90% of them do. And mutual funds charge fees sometimes as high as 5%, including hidden fees. Okay. So why do they exist? Because they have great marketing and advertising departments, and because they have great relationships with retirement savings programs departments in big companies. Yeah. And great lobbyists as well in DC. Yeah. Don't buy mutual funds. They're a scam. And go to my YouTube vlog news search on mutual funds, and you'll see videos on why they're a scam as well in more detail. All right, so let me wrap this up by saying there are other indices as well that you can buy. This one here, traders call the Qs, QQQ. And this is just the technology stocks within the NASDAQ. So the first thing we do, again, is we go to volume to make sure that we can trade, I should say invest, not trade. We can invest and be able to get out if we need to. Then we look here at the profile to find out what the expense fee is. It's 0.2% per year, which is good. It's low. And just for fun, while we're here, let's look at holdings as well. So what is in this here? So what's in this QQQ, which is an index and an ETF, okay? It's an exchange-traded fund, but it's also an index. If we scroll down here, we can see the largest holdings are Apple, Microsoft, Amazon, and a bunch of other tech companies for the most part. Yeah. And I can't believe that NVIDIA's market cap is higher than Intel. I'm absolutely blown away. It crossed above it briefly the other day. Absolutely blown away. Amazing, amazing. Yeah. And we did a case study in my MBA degree program on Intel and their Pentium chip PR disaster, which turned into a great marketing campaign for them back in '94. Okay, so let me look at one more though, because I don't want to be too US focused. So you can also buy international ETFs. So if you want to invest in the Bovespa or in Brazil, the Bovespa is the index for the Brazilian exchange. You can type in EWZ. Okay, it's called the iShares MSCI. That's Morgan Stanley Capital Index Brazil capped ETF. And here you can invest in the Brazilian economy, okay, in Brazilian stocks. So let me go here. And the first thing we do is we look at the volume. Okay, good. It's liquid enough. Then what we do is we go to the profile to see what the fee is. And the fee is 0.59, a little bit high, but it's okay. It's okay. Then we look at the holdings. And we know that Brazil is a natural resource-rich economy, like Canada. And so there's a lot of commodity companies for the holdings here in this index here, like Petrobras, which is petroleum Brazil, etc. Last one. I have to mention Canada because I'm Canadian. EWC. If you want to invest in an ETF that's also an index that represents Canadian stocks, you can type in EWC. First thing we do is we look to see what the volume is. Good, it's liquid. Then we look here at the expense fee. And the annual expense fee is 0.49, which is good. It's decent. And then what we do is we look at the holdings. And so as I mentioned, the Canadian economy is natural resources rich, and there's only 6 major banks there. So that comprises the largest caps within this index. So right here, look at financial services, massive, 34% or 35% here. And then if you look at a combination of energy, basic materials, whatnot, you'll find that commodities in general is also quite big. So here we go. Here are the components. This is a pipeline company here. This here is a gold company, Barrick Gold, ticker ABX. This here actually is a real estate company. This is another energy company here. A lot of commodities. Then you got a lot of big banks as well, right? You got big 6 in Canada. And then Shopify. That's so awesome, man. So good to see a Canadian tech company doing well. Very cool. Very cool. So anyway, that's ETFs in a nutshell. And if you have additional questions about that, please let me know. Thank you. All right. Okay. Okay. And another question here is, are dividends applicable when you own ETFs? Yes. Yeah. If a company issues a dividend, that's a component in that ETF, you get that dividend as well. And quite often you can participate in dividend reinvestment programs. So the dividends are automatically reinvested. Yeah. Okay, Canal. Hey, Canal, hope all is well. Canal saying, good morning, Chris. Hope you're doing well. Likewise. And you wrote, how do venture capitalists value a startup? Yeah, it's a great question. And we're actually going through that right now in my MBA degree program. We're going through venture capital boot camp right now. Yeah. And the case study we're looking at is Shark Virtual Reality, which is a pretend company founded by Tony Shark. And Tony has been in a lot of my other courses as well. I want to show you a post over here of Shark Virtual Reality here. Yeah. And so the way that we value Shark Virtual Reality or private companies, the way that venture capitalists value private companies is there's no earnings usually, and quite often no revenue if it's an early stage investment, meaning one of the first rounds when the founder of that company raised money. So what you do, you can do a couple things. Number one, you can create financial statements and forecast the future, which I teach in a lot of detail in my courses and my MBA degree program as well. And if you forecast what the financial statements will look like longer term, then you can actually value the company. And you got to use usually 3 different methodologies, only because one of your valuation methodologies for a target price is going to be way off. We just don't know which one it is. So you can minimize the risk of error by taking an average of all 3. So one way is you look at the price earnings multiple this company can have in the future. Another way is you look at the price to revenue multiple that this company can have in the future. And the reason I say price to revenue is because a lot of private companies, especially in tech, they're not profitable. In fact, a lot of them are not profitable after they go public even. The last way you can look at, which is my least favorite, is discounted cash flow, which basically means you calculate how much cash the company's going to make into the future and discount it all into today's terms. I don't like discounted cash flow analysis, or DCF as they call it, because there's a lot of unknown variables. I like to keep things simplistic. As Don Draper said, make it simple yet significant. But when it comes to a DCF, if I tell you X plus 1 is 3, what is X? It's 2, of course. If I tell you X plus 1 plus Q plus W plus cup plus microphone is 3, what is X? It's too hard to solve for it. And that's what happens with DCF. There's too many unknown variables. So garbage in, garbage out. And so my favorite way to value private companies, though, is I like to look at price to revenue initially to see how the company is valued relative to other companies that are growing that quickly, that are now public or used to be growing that quickly. And the reason I say public is because you can always find out by reading the annual reports or the S1 IPO document filings for publicly traded companies to see what their financials were in the past. And the other way I like to value, personally, is price to earnings. So I forecast my income statement 20 years in the future, whatever. And then I take the PE I think the company should trade at in the future, and I discount it back to today. That's how I look at it. Yeah. But a lot of times, venture capitalists aren't as sophisticated as you think. And I came from Wall Street. I worked at Goldman, and then I worked at a bunch of hedge funds and started my own hedge fund. And then I went into venture capital. And when I worked on Wall Street, and I worked at a hedge fund called Citadel, great company, and Goldman, great company as well, I learned a lot about how to value companies. I did. And there's a mathematical method behind it, a great process. But venture capitalists don't really do that. It's not that sophisticated. And I was surprised when I entered VC about that. And so what venture capitalists quite often do is they focus a lot more time early on analyzing the management team. And that's a problem with business schools. MBA degree programs They teach you how to analyze companies and financial statements, but they don't tell you how to analyze a management team or even look at the management team. What's the point in investing in a company with a crappy management team? So venture capitalists would rather invest in an A management team with a B business model instead of investing in a B management team with an A business model, because the jockey is more important than the horse. And so venture capital firms spend a lot of time focusing on the quality of the management. Now, in terms of how do they value a company, it's really, there's no science behind it a lot of times. It's all based on the quality of the management team. So let's say, for example, that Elon Musk wanted to start a new company. People are going to invest no matter what. And the valuation will probably be pretty high because people have confidence in him. Same thing with Jeff Bezos. Jeff Bezos has the Midas touch. Investors love him. They do. And so if Bezos was, hypothetically speaking, if he decided to quit Amazon tomorrow and start a new company, whatever company it is that he starts, if it's a for-profit company, people are going to assign a very, very high valuation to that company because it's Jeff Bezos. And so the bottom line is that ideas are commodities, but execution is not. If you invest in a great management team, then your likelihood of success goes up a lot. Now, in the public markets, there is this notion that we've all heard of, which is past performance is not indicative of future performance. And it makes sense. However, and this is controversial, in the private markets, that's not the case. If you invest in somebody that's been very successful in the past and has added a lot of value to shareholders, then your probability of making money with that person again is much, much higher. I mean, there are people in Silicon Valley, like Andy Bechtolsheim, who I've met before, great guy. And Andy was the first employee at Sun Microsystems. He was also the first investor in Google. If Andy started another company today and he needed to raise money, he doesn't because he's a billionaire, but if he needed to raise money, people would give him money without even knowing much about the business plan. So when it comes to venture capital, people focus much, much more on the quality of the management team first and a little bit less so on the business model. Now, obviously the business model has to be sound. However, venture capitalists know that a lot of companies that are early stage, that are inventing a market, they're going to have to pivot because things will change. They always do. And so investors want to know, or at least have some degree of confidence, that the founder they're investing in, that she or he can pivot as well, if they need to. If they need to, yeah. Okay. Next question is from Kim, who's saying, I watched an economic presentation this week, which suggested the stock market is in for a very big roller coaster ride. Yeah. Considering this, what options do you recommend for a safe and decent return? Yeah. So I don't think of it that way. Like I'm a very, very long-term investor, and I back up the truck and buy stocks when everyone's freaking out. Because as Warren Buffett said, you need to be greedy when others are fearful and fearful when others are greedy. So I don't think of it that way. I buy my favorite stocks when they're on sale. And Warren Buffett once said, the New York Stock Exchange is the only store in the world where consumers sell stuff when they go on sale. So I'm a contrarian. You have to be a contrarian because if you buy the same stocks that everybody else is buying and everyone loves the stock, who's the incremental investor to push it higher? So what I do is I always buy whenever there's a material sell-off. And you know what? It feels uncomfortable, and it should. It's kind of like when you buy your first house, and of course you don't want to take on too much debt, but when you buy your first house, if you don't feel uncomfortable, you're not buying enough house. And so we have to condition ourselves to be unemotional about business. Dale Carnegie once said that we have to understand in business, people are often creatures of emotion and not creatures of logic. We need to be unemotional about business as well, and stocks. And we got to buy when there's blood in the streets, which is an awful thing to say, but it's a big saying on Wall Street. You got to buy when everyone else is freaking out. You do. And you can't trade. because there's no such thing as a successful trader. What are their names? They don't exist. They've never existed. They never will. The worst thing that can happen is you start to trade stocks for the first time and you make a lot of money. Because what happens is that's just like going to a casino, and the first time you put money into a casino, you win a jackpot or whatever it is. You think, oh my gosh, this is repeatable. It's not. You got to be long-term focused and just back up the truck and buy your favorite stocks that you do research on when everyone else is freaking out. Yeah. Okay. Okay, next question is, considering the COVID situation in the United States and current stock markets, why do you think the US dollar is still featured strongly as a currency? Yeah. And a lot of people get upset when I say this. But the US government is the last entity on this planet that will ever go bankrupt. It is what it is. It is what it is. Other countries will go bankrupt first, and companies will go bankrupt before the United States government. And so what happens is, quite often, this happened back in 2008. So in 2008, we were within 24 hours. We mean the whole world. We were all within 24 hours of bank machines not working. And what happened was a lot of people in other countries were freaking out. And they thought, where can I put my money where it's safe or safer? And so a lot of people bought US dollars and gold as well, which is usually countercyclical. Now, I think that cash is the worst investment you can ever make because you have no control over how much a government is going to print or make of cash, which is why cryptocurrencies now exist, because there's a limit or a dearth of supply on many cryptos. But I do believe that the safest country to invest in from a government perspective, federal government perspective, is the United States. That doesn't mean that you can invest in municipal bonds in the United States and not lose your money. You can lose every penny, which happened to a lot of investors that bought municipal bonds, which people call munis, which happened to a lot of investors that bought bonds in the Orange County, the OC, right? They went bankrupt. They lost a lot of money. So it's all relative. It's all relative. But the U.S. Is a flight to quality. And I know it seems ironic right now to even say that because the whole world, the cases for COVID were like this initially in March, April, and then they went down for the whole world except the United States is up here. It's still seen as a flight to quality. The next question is, when oil is low, gas prices have often been quite high. Why do you think this is the case? Also, gas prices can change significantly from one town or city to another and one country to another. Yeah, no, it's a great question. It's a great question. There usually is a correlation, generally speaking, right? So when oil prices drop, usually gas prices drop as well. Okay, there is some sort of loose correlation. Okay, might not be perfect. But the reason that gas prices are higher in parts of the country than others is because they're located in different parts. Obviously, that was the stupidest thing I've ever said. Let me redeem myself. Here we go. So if they're far away from where the natural gas is drilled or found, then it costs more money to transport the gas to the end consumer, right? So it's more expensive. Also, taxes are different as well in different places when it comes to petroleum. Yeah. But usually if you live close to where the natty gas, or natural gas they call it, is found, then the prices can be lower. Yeah. Okay. Hey, Ray, how are you? Ray is saying, hi, Chris. Next week will be something like a birthday for your webcast. That's right, man. It's going to be number 100. 100, yeah. And then you wrote, so you'll need to make a wish. And then maybe we could help it come true. Thank you. No, it already has come true because you're all here. And I'm living my dream life because I want to help people humbly if I possibly can. And I make a lot of mistakes. And I want to teach. And I just love it. I wish I never did anything else in life except for teach. I absolutely love it. And I love teachers. And I gave a TEDx talk not too long ago about how I believe that technology, education, and acceptance, TEAT, technology, education, and acceptance, can change the world. Education can change everything. And I'm very blessed to have a student named Vital, who's from Rwanda, and we're building a school together. In fact, we're making a course now on Udemy together, and the proceeds are going to be to build that school in Rwanda. And we're setting it up so that it's solar on the roof, and we're going to provide free access to education online courses. Of course, all of my stuff are free forever. And then we're going to try to replicate that business model and get Bill and Melinda Gates involved and try to replicate it so that we can rinse, lather, repeat, and deploy that system globally for free, or at least have some sort of a blueprint or a business plan so people can do that globally as well, because we're all in this together. Yeah. Okay. Okay, next up is, and guys, I want to, what I'm going to do is I'm going to take a quick break. And I'll show you this video I made. Okay, so I'll be right back in a second. Thanks. One speech can change your life. You will learn to love public speaking. One speech. Oh, hey there. One speech can change your life. You can. Oh, hey, I'll be with you in a second. Okay. You will learn to love public speaking. Oh, hey, actually, I'm practicing for my speech. Can I rehearse it with you and you can maybe let me know what you think? Okay, thanks. One speech can change your life and touch the hearts of so many people around you, whether you realize it or not. And this assumes you have no public speaking experience at all. No problem. I used to be terrified of public speaking. Much more than you. I'd rather have been here than up there. For example, when I was in business school at Columbia University, as well as during the training program at Goldman Sachs, I asked more questions than my peers did because I was terrified of being put on the spot. But now I feel alive while giving speeches. You know, people might forget what you said, but they'll never forget how you made them feel. This course is not based on theory. It's based on real practical experience. I've given a TEDx talk, numerous keynote presentations, and graduation speeches in front of hundreds of people. I've given numerous business presentations, and I've been interviewed by many media publications. You will learn to love public speaking on the spot with no preparation. So that one incredible speech can be the bridge between where you are now and where you want to be. It's almost impossible to achieve all of your goals in life without learning how to master public speaking. Anyone that's had a significant influence on the world, from Dr. Martin Luther King to Malala, Bill Gates, or Steve Jobs, all had one thing in common. They've all had the ability to communicate with large groups of people. In this course, I will include 25 different templates for every type of speech occasion, from a personal speech at a wedding to a business presentation using Skype. This course will teach you everything there is to know about public speaking. One speech can change your life and the lives of so many people around you. Life all comes down to a few short moments. So how was that?
Guess it was okay, Dad. Can we go home now?
Sure thing, bud. All right, let's go. So I've got to take him home, but I'll see you in class. Thanks. So how was everything? Had a good day? All right, thanks for that, guys. Appreciate it. And I noticed I made a mistake too. You could see on the top, because I had it letterbox, that video, you could kind of see things going on in the background. This is week 99. I still make plenty of mistakes. All right. Okay, cool. So next question is, what does it mean, high enough volume for day trading of stocks? How many transactions is enough? Yeah. So I don't recommend ever day trading. I promise you, it's a recipe for disaster. Just be long-term focused. I promise you, you will get burned. You meaning all of us, if we day trade, because you'll be fooled by randomness. Yeah. Because stocks move in a short period of time, not based often on the fundamentals of that company. It might be for geopolitical reasons. You know, stocks might go up and down based on what saber rattling there is, so to speak, between Washington and Beijing, or Riyadh and Moscow when it comes to energy price, etc. Or stocks might go up or down based on healthcare statistics that are released, like the number of COVID infections, etc. Or a stock might go up and down based on a similar stock in that sector that it trades in, releasing positive or negative news. And so each month has 30 days, and each month has 20 weekdays, and that's 20 trading days. A lot of random stuff can happen in 20 days. So I don't recommend trading. I'm investing just for the long run. Buy and hold, buy and hold. Do your research first, or if you already own something, then buy and homework. And you can take my complete financial analyst course on Udemy or my MBA degree to learn much more about how to do all this. But when it comes to you wrote here, how many transactions is enough, or how much volume is enough? I'll show you. So it's pretty simple. All you do is you type in the ticker, okay, up here. So Twitter is the first one that comes to mind here. Here it is. And you make sure that you can get in and out of the stock if need be, within a day at least, or a couple hours, okay? Just in case you have to sell. I want you to be a long-term investor. But what you do is you go to the average volume here, okay? So let's say that you want to buy 1,000 shares of Twitter. It's going to cost you about $35,000. So you have to make sure that Twitter trades much more than $35,000 worth every day. And it does. Because the average volume for Twitter is 23 million shares times $35, which is plenty liquid. It trades like water, is what they would say on Wall Street. It's liquid enough. Yeah. All right. Okay. Next question is, should I pay Yahoo Finance for premium in order to see detailed information for companies, or am I supposed to get it from sec.gov only? Yeah. Do not ever pay for anything for finance or when it comes to investment advice. Okay. I humbly want to teach you how to fish and not provide you with a fish, but I don't want you to ever rely on others. Okay. Because what happens is quite often there are sponsored stories or ads, whatever, that appear on Yahoo Finance. And a lot of times when people give you advice, they're biased. They own the stock, and they might even disclose that. Like when a mutual fund portfolio manager gets interviewed on television. Yes, they might disclose that they own that stock, but of course you're going to say positive things about that stock. It's kind of like seeing an interview with a CEO of a company and then investing. Dangerous. They made CEO because they're great salespeople. I always want you to do your own research. Nobody is smarter than you, and you can beat these people on Wall Street and in different financial markets if you roll up your sleeves and do the work. And I have a course called the Complete Financial Analyst Training and Investing course that I think will help out a lot with this. Yeah. So don't pay for anything ever. And go right to the source if you can. So I'll show you what this means. And I know what you're talking about with sec.gov, but I want to show other people as well. So on Yahoo Finance, sometimes you can get the financials here as well. If you can, I want you to go directly to the source because sometimes this information is not right. So you can always get information directly from the source by going to the investor relations portion of a company's website. So all you have to do, and I'll show you another way as well to do it in a second. So all you do is you search for investor relation and the name of the company, Apple, I guess. Okay. And so here you'll get tons of things that will help you understand the financials. The quarterly reports. You can also listen to earnings calls along with everybody else. Nobody has an edge on you, okay, because of Regulation FD, which means fair disclosure, which means that you and I have the same access at the exact same time as all the professional investors do right here. So you can either go here, or what you can do is you can go to a government website called sec.gov. And when you're at sec.gov, this is the Securities and Exchange Commission, what you can do is you can go to company filings. And since we're talking about Apple here, I'll type in AAPL. Okay. Search. Whoops, did I type that wrong? More options. Oh, here it is here. Yeah. AA. More search options. Let's go here. Oh, here it is here. Yeah. AAPL. See, this is week 99. I still make plenty of mistakes, man. Fine companies. Here we go. Good. So this here are all of the SEC filings for Apple. And by law, if you're a publicly traded company in the United States on NASDAQ and the New York Stock Exchange, for example, you have to file your documents here, and everybody can get access to them at the same time. So an 8K means an important press release. It could be earnings or something else. A 10Q means a quarterly report. Okay, so every 3 months they have to release this. And then there's something called a 10K, which is the annual report, which is down here. And for brand new companies, there's a document called the S1, which is awesome because it contains tons of information on the risks for that company and financials. So if we were to click here on the 10K for Apple, okay, and go here, we can actually go and look through all the financial statements for Apple, okay, and all of the, here we go here, all the financial statements. So this here is for, this is an annual one for the fiscal year ended 2019 September. Okay, and companies have different fiscal year ends. A lot of them have calendar year ends, meaning December, but some are off quarter, like Apple. So here are all the numbers here you can get access to. Now, what I like to do is I like this website here actually, and I don't get information from them in terms of what to buy and sell. But it's called BAMSEC. That's BAMSEC. And you can get a free version of this as well if you want, or a free trial. So if we go to Apple here, for example, and I went to the annual report for Apple, the beautiful thing about this is you can actually download financial statements from here directly. So this is the same document we looked at before, okay? But what you can do is you can download all this stuff if you want to. So I can click download, and it will download it in Excel format. Then what we can do is we don't have to manually enter all this stuff. It's already, let me zoom in a bit. It's right here. And this is formatted as numerical. This is formatted as text for you automatically. Yeah. All right. Okay. Next question is, and hold on one sec. I can't stand that. Microsoft wants me to upgrade something now. Not now, Microsoft. Okay. Next question is, when you buy government bonds or gold, you're supposed to hold them forever, or you buy them in bull markets when they are cheap and sell them in a bear market when they're expensive and repeat? It's a question, yeah. So I'm a very, very long-term investor. And like Warren Buffett, for example, when he invests with the notion and understanding, and he says this, that the market might be closed for 10 years after he buys a stock. Now, obviously, he knows the market is not going to be closed for 10 years after he buys a stock. But that's the mentality you have to have. You have to be extraordinarily long-term focused. And so that's my investment philosophy. And I usually buy when everyone else is freaking out, right? You got to be greedy when others are fearful, to quote Mr. Buffett, and fearful when others are greedy. Otherwise, you'll never make money. So I'm very long-term focused. However, if companies that I buy reach my target price, then I will sell. Or book some profits. So I was buying a lot in March of this year, and I was selling a lot recently as well. And before you buy a stock, I want you to do one-page write-up as well. And you can take my complete financial analyst training course to learn more about how to do this, how you think on Wall Street. Or you can take my MBA degree program, which has a 30-day 100% money-back guarantee. And then what you can do is I teach you much more advanced ways to analyze stocks and do write-ups. Yeah. All right. The next question is, how do you imagine your webcast in 5 years? Now, I'm sure it will change, but would you rely on newcomers or the same audience? Yeah. So anybody that wants to join can. Anybody can, yeah. The audience, I have no idea. I'm here to serve others. My students are my customers. And so it can be any student that I've ever had or will have within the next couple of years. And I'm humbled to say I've got students in every country. Yeah, and I have over 1 million students now on all platforms. But I think the quality will get better. We're getting better now with it, or I should say, I do this all by myself in here. I'm an army of one when I do these things live. And the reason why I like to do this live myself is because everything I do, I want to teach you how to do as well. And you don't have to have expensive equipment to do all this. Like this here is my oldest camera. It's really old, but I know how to use it well. And a lot of people can get better resolution with an old Android handset and iPhone than I can. Yeah. And this here is this is a slider, and you can get these for $100. Okay, it's a B-roll slider. I learned about this concept from Dan Rather, actually. He has this great course called The Truth About the News on Udemy. Yeah. And I've been experimenting also with an up and down camera here. So this guy here. And so what I want to do is, like, whenever I watch talk shows, like Jimmy Kimmel or whatever, or John Oliver, they have a massive staff that does all these live things. I do this myself, right? When I do these live webcasts. I want to be able to replicate what they have. And so I've been playing around with this new top-down camera made by a company called Elcron. And I reinvest a lot, as you can tell. I don't, like, with my profits that I've been humbled to be able to make from teaching online, I reinvest a lot. I reinvest in growth. It's just my mentality. I've always been this way. But I think it'll look a lot better. So the look I'm going for with this, by the way, and this is a DSLR camera, is, because it has to be lights go up and down, is when you watch a talk show and the opening scene is breathtaking with a camera coming up like this. I want to go for that look. It's not working out perfectly yet, but I'm trying. It's getting a lot better. Like if you go back to my very first webcast, it's funny to see how things have changed a lot. My first webcast, I was kind of nervous actually a bit. There were crickets, like there was nobody on the call. And so my first couple of webcasts, I had to have like something ready, prepared to talk about just to fill time. Yeah. So, but it will look better than it does now. And what I'm also doing, right behind me there, what you can see is this product made by Netgear, and it's called a mural. And let me go here, and I'll show you what it looks like. So this here. So what I do, and I have been doing, as many of you know, is I create these posters behind me, which are inspirational, and you can see them from different angles here. And here's probably the best way to see it. And it's kind of expensive for me to keep making these. I do it at Kinko's, FedEx Kinko's. I do it in bulk, and they brought the pricing point down a lot for me. It's great, but it's kind of pricey. So I wanted to get something that's computerized here, so I can save a ton of money, and I can change it. I'll show you to you in a second. Now this is a matte screen. It's called Canvas, the Canvas Mural 2 product by Netgear, and it's great because it's matte and it's not reflective. It is in this angle though, unfortunately, right? Because of the lights, but in this angle it's not. And so what I can do, and I've started using this for backdrops and exhibits and stuff for my MBA degree students. Let me show you what I can do. Okay, and it's amazing because you can get a subscription service. You can have the greatest works of arts ever up here as well. So let me go into my studio here, and I'll show you. Right. So what I actually did was, for one of my classes, I was teaching about entrepreneurs, and so I put up the really inspirational people over the years, and this is the Think Different advertising campaign from Apple. Okay, and you might recognize a lot of these people. Some of them you won't. But I threw a bunch of these together here. And so this is set up so that every 30 seconds it would change to another picture. Okay, so that's what I'm playing around with now. So I've got a lot of great entrepreneurs. So hopefully it will change to the next picture. Hello. Every 30 seconds it's supposed to. There we go. Here, okay, good. So that's the great Muhammad Ali. So I'm playing around with this as well. So I'll leave that running in the background for a little while, see how that works out. I had a complaint actually by one of my MBA degree students when I teach live this week. He said, rightly so, and the best customers you have are the ones that complain because they're giving you feedback. And he said that it's distracting. And so I always try to push the goalpost out and try new things. He said it's distracting, so I'll leave it up for a while. By the way, that's Francis Ford Coppola. And he made one of my favorite movies ever, which is Tucker. You see the car there? Tucker car. A Man and His Dream. It's about this dude, Jeff Bridges. It's a real story too, who took on the automakers to try to create a better car. And he succeeded in making a better car, but the lobbyists in the Michigan area representing the big three autos put him out of business because they were corrupt. Yeah, that's Sally Ride. She was the first female astronaut in space, and unfortunately she passed away. I think it was January 20th or so of 1986 when the space shuttle there was a malfunction. Yeah, and I remember there was a great speech by Ronald Reagan at the time where he said they touched the face of God. Like it was very powerful what Reagan said at the time. So, that's Sally Ride. But let me go and change this now back to something else. Oh, this is Rosa Parks. And this great picture here, that's Dr. Martin Luther King. I'm getting shivers. Dude, I'm leaving this on, man. Yeah. Yeah. Okay. Okay. And Ray is saying, can you show online how you set up a stock alert? Yeah. It's pretty intuitive within Yahoo. I haven't done it in a while. It'll take me a couple seconds to figure it out. I would just do a search for YouTube video on stock alert on Yahoo. But you can do it. You can do it. Next question is, if you're interviewed for a CEO position, what kind of question should you expect? Yeah. Yeah. So I recommend taking my complete job course because it'll teach you everything you need to know about how to interview thoroughly. Okay. But if it's for a CEO position, you're going to probably get more corporate strategy questions and less so questions about financials, etc. And so I have a course, and it's my only course where there's a 100% lifetime money back guarantee called the Complete Job Course. And I promise you that this will materially help you in your career. So let me show you that course, and I'll come back in a second. Thanks.
When you wake up in the morning, is your first thought, how am I going to follow my passion, take my career to the next level, and find my dream job? Me too. At least, I used to feel that way. Now, of course, I really do have my dream job, sharing my experiences with you. So what does it take to get your dream job? First, you need to build the perfect resume. You need to interview better than anyone else. And you need to build the perfect LinkedIn profile in order to get recruiters and employers to find you. Great networking skills are also very important because you need to build relationships with those that matter to your success as well as your happiness in life. I will teach you how to perfect all of these techniques so that you will get your dream job. One espresso, please. Alternatively, if your goal is to get customers for your business, not to worry. We cover the art of networking and creating great business relationships. Anyone can take this course. No prior knowledge is needed creating resumes, optimizing LinkedIn profiles, or drinking espressos in European cafes. This course is for everyone of every age, in every industry, and for every career type. My passion has always been helping people get their dream job. I've conducted more than 1,000 interviews. That's one per week for more than 20 years. I've successfully switched careers many times, from working at Goldman Sachs, to the consulting industry, to the technology sector, to venture capital and hedge fund companies. I want to help you reach your full potential. Together, we will turn your perceived weaknesses into strengths. I have included 3 exercise books to help you materially improve your ability to network, your interviewing skills, your resume, and your LinkedIn profile. This is the most comprehensive career course available anywhere on the market. Many of my students that have taken this course have gotten their dream jobs. We will make it happen together because when it comes to your career, Even the sky's not the limit. It's interesting because that end scene there you saw, and we recorded that in Prague in the pre-COVID days. But that end scene, what we did was the drone stopped working. And I was terrified because it was an expensive drone that we rented. And so what happens is this: if you buy a drone, almost all governments, they regulate the GPS of the drone so that drones are not allowed to fly close to government buildings or very populated places sometimes. So I had this great scene you saw there on a bridge in Prague. And the drone was supposed to come up to me, and I was supposed to say, if you take this course, even the sky's not the limits in terms of what you can achieve. And it actually stopped there. It wouldn't move. Like, it doesn't drop out of the sky, but there's like this invisible force field for drones, kind of like the Iron Dome around Tel Aviv. It's interesting. Yeah. All right. Next question is, Ray is saying, if the IPO of a company you want to buy was 5 years ago, do you still read the S1? Isn't it outdated, or is the annual report enough? No, still read the S1. The S1 has a wealth of information. Let me show you what an S1 looks like, okay? And you can get these online as well. So this here is the S1 for Facebook. Okay. Now, Facebook went public in the summer of 2012, but it's still worth reading this because a lot of risks are highlighted here. Tons of them. So these things are created by investment bankers, and lawyers. And they list every possible risk you can think of. So let's take a look together. Okay. I got this camera angle here. I got to improve the lighting on this one. Sorry about that. But the S1 document contains the investment bankers that took the company public. Okay. Top left was Morgan Stanley. It's prestigious to be top left. And this is a disaster of an IPO, by the way. Morgan Stanley really messed it up. And then it tells you all the information you could possibly think about with the company. Okay. So you can get the financials, just a high level perspective, what the company's strategy is. And there's just a ton of risks that are listed as well. Tons of risks. And a lot of these risks are still relevant today with Facebook. But when I read this back in 2012, and all the financials too, it's about 100, let's see here, close to 200 pages, yeah, including exhibits. But when I read this back in 2012, the biggest risk I could see when I read this thing is that Facebook did not have a mobile strategy at the time. And so I don't know if you remember this, but when you used Facebook back in 2012, and if anybody's under the age of 30, you probably never used Facebook, and it's for old people I know. But back then, there was no app. There wasn't an app available for Facebook. So if you wanted to use your Android handset or your iPhone and get access to Facebook, you had to go to just the Facebook website within Safari or Chrome or whatever. It was ridiculous. They didn't have a mobile strategy. But a lot of people, they didn't bother reading this. You have to read these things before you invest. And yes, it's still relevant today, a lot of this stuff. Now, let me show you quickly how to get access to this online. And you have the same access to information online that all of the big investors do on Wall Street, okay, or anywhere in the world. So you go to sec.gov. And companies, by law, they have to file their financials on sec.gov. So what you can do is you type here the ticker, Facebook, FB, for example. And then you can do a search for this document I just looked at called the S1. Okay, and here they are here. And the reason they have a number of them here is because sometimes they'll actually amend these. So A means amendment. So this one here I have is on May 3rd, 2012. That's what it says in the cover page, which is this one here. Okay, so you go here and you can read the document that I just showed you. This is the exact same thing. Here it is here, starting here. The exact same thing, okay? You can read this. And what you can also do, and what I recommend doing when you do research, is read the 10K as well, which is the annual report, okay? Which basically is similar to this S1, but with a little bit less information, okay? So you can click through, click through and read this if you want to. Yeah, and you can actually look at all the financial statements here as well. Now,
In order to get this information in your financial model, all the financial stuff, you copy and paste, or you can export it to it's a pain in the neck. So what I like to do personally is I use a website called BAMSEC. So let me go back to the homepage here of BAMSEC. BAMSEC, here we go, yeah. BAMSEC. And then this is a subscription service. You can get a free trial. So if I enter in the ticker for Facebook here it is here, Facebook. And I can actually go through and let's look at the 10K. And you can look at the financial statements and then download these directly. So let me just go here actually. Selected financial data. So all this stuff, any financial tables you want, you click download and then boom, it's available to you in Excel. So you don't have to hard code all this stuff in directly, right? And it's numerical fields too, it's not text. All right. All right, next question I've got here is there a website you can recommend that shows the list of top index or ETFs? If so, what are the significant factors to look for, meaning dividend yield or other? Yeah. So I would say that, so there's 5 ETF companies that dominate the market. They have 90% share and they are as follows. The biggest one is BlackRock, which has over $7 trillion in assets, and they own what's called iShares. Okay, that's their ETF products. Okay. The second biggest one is Vanguard, great company. Okay. The third biggest one, I think, is Schwab. Talked to Chuck. I actually met Chuck once at a party in Atherton. He and his wife, really nice guy. And then there's 2 others. Let's see if I can remember them. I don't know. I can't remember the other 2. Van Eck is not one of those 2, but there's 2 others as well. Invesco. Invesco is one, and there's one other that will pop into my mind later on. So I would just go to those 5 or 4 aforementioned websites because the top 5 companies control about 90% of the market. And I like to use them only because they do it in scale. And if you do anything in scale, if you produce a lot of products in scale, it's economies of scale to the extent that prices are much lower and the fees are lower. So what I tend to look for is, and you mentioned dividend yield or other. For me, the most important thing is volume, liquidity. Okay, so what is the average number of daily shares that trade? Usually it's high with those 5 big companies there, 5 ETF companies, even though I can't remember the 5th one. It's killing me. It'll come to me soon, I promise. I also look at the expense ratio, which I usually like to be 0.5% or less. So let me show you really, really quickly here. All right. And I'll go to BlackRock's website in a second. So if you go to Yahoo Finance, you can type up an ETF for anything. So if you type up the ETF for SPY, this ETF, we see the volume here is plenty, 100 million shares a day times $319, you're good. Then I look at the profile and I look at the expense fee, which is pretty low here. It's less than 0.1%, I think. Yeah, it's 0.09%. So I look at that closely as well. And then you have to do your own research on the indexes yourself or the individual components. So for example, if you want to invest in the oil drillers, companies that make money by drilling oil, there's the OIH, okay? And this is Van Eck ETF. First thing we do is we look at the volume. Okay, it's good. Over 700,000 shares daily, very liquid. We look at the profile to see what the expense fee is. It's good. It's less than 0.5%. I like that, the annual expense fee. Now we look at the holdings. So as we scroll down, and we can see that 100% of the holdings here are in energy. It's an oil driller ETF. And these top 10 holdings represent 70% of the assets in this oil drilling fund. So you've got Schlumberger, Halliburton, Baker Hughes, Tenaris, which is an international company, Transocean, which has got the best ticker ever, which is RIG. Yeah. So, and you have to do research on these individual companies too, as well, if you have time to do that. Yeah. All right. Now let's go to iShares, and I talk a lot about equities. Let me talk about bonds. So iShares, and this is owned by BlackRock, which is the largest ETF company in the world, largest asset manager. Actually, they have $7 trillion in assets. But if you scroll down, you can learn a lot more about their bond funds. Now, I talk a lot about stocks. Let me pivot today and talk about bonds because this is fun. So the way that bonds work is they're valued off of a yield curve. And a yield curve is this. So basically, when the US government, for example, when they issue bonds, when they raise money, and you buy treasuries, which is basically US government debt, the way to find out what the price is of these treasuries, meaning the return rate, the interest rate, is to look at what's called the yield curve. It's called yield curve because yield means the return or interest rate, and it's a curve. And it looks like this. Let's go right to the source. So let's go to yield curve government. It should come up here at the top. Yeah. Daily Treasury yield curve. Okay, and this is from treasury.gov, which is the United States government website, the Department of the Treasury. And we can see here what the yield curve is. And it changes usually every day. And you can look at the yield curve for any point in time going back a gazillion years. So 2005, this is the information here for 2005. Okay. And then you can also look at the past few days or current month, whatever it is. And so what a yield curve will tell you is what the market is pricing in for interest rates. So we can actually chart this if we want to. Let's make a yield curve together. So let's grab the yield curve for July 1st, right? Not today, July 1st over here. So let's go here and let's build this ourselves in Excel. And I'll show you what all this stuff means. It'll be fun too. Okay, new, make it big, get more real estate, zoom in a bit, and let me paste this. Okay. So this basically tells you on July 1st, how much money you can bet by investing in US government debt, treasuries. Okay, so right now it's 0.12% for 1 month. It's pretty low. And then it's much higher, or higher, I should say, in 30 years. And what that is telling you is the market is saying, okay, yeah, things suck now because interest rates are basically zero. But you know what? In 30 years, things will get better. And governments raise interest rates usually when things are better. Okay. So this is called a positive yield curve. And I'll chart it and show you what this means. Let's go to Insert, Charts. I don't like that one. Let's go to here. Good. Yeah. Whoops. Wrong one. Let me start again. Gosh, this is week 99 of my webcast, and I still make mistakes. We're going to insert a chart, and I'll explain why it's called this. Recommended charts. Nope, I want to do it myself. This one here. Yeah, okay, good. This is it. Great. So, and this chart basically tells you that the yield curve is positive. Now, it's not a pari passu perfect chart because this is 1 month, 2 month, 3 month, and then we go to decades over here. So it really looks more like this, gradual, like that, okay? Like that. Okay. And a lot of people when they create these yield curve charts, they look at just the 2 year, I should say, and the 10-year. One data point doesn't make a trend, but two or more does. Okay. So this yield curve is positive. And what that means again is things suck now, interest rates are low, but they will get better in the future. Right? So that's a positive yield curve. When a yield curve is negative, meaning rates are high now, and in the future they'll be lower, it's telling you that things can't get any better than they are right now. Things are going to get worse in the future, which is what happened in the late 90s when rates were high, but we knew that things were going to get worse because it was a big bubble, the market back then with tech stocks. And Alan Greenspan, who was the Federal Reserve chairperson at the time, meaning the person in charge of raising or lowering interest rates, he said there was a lot of irrational exuberance in the US markets. So this is a yield curve, and this is how government debt is priced. Let's talk about what this means for ETFs. So let's go here to ETFs. And this is if you want to invest in ETFs or exchange traded funds that are a collection of a bunch of different bonds, for example. So right here, this is the yield curve that we just charted. You see here? So we just charted this yield curve here. Rates are tiny now. They'll be higher in 30 years, 1.5% or so. So this is the U.S. government debt or treasury debt. And this first world countries that have sound economies, this is what their curve looks like now. So what is this line here, Chris? Well, this here means if you want to invest in companies that are low relative risk and bonds, like IBM bonds would be here, for example. Well, Chris, why is this higher than the U.S. government? because companies are more likely to go bankrupt than the US government. So the returns that investors demand are higher, okay, for bonds, which is just like debt, like a loan. Then up here, there's something called high yield, which is something pioneered by a brilliant man named Michael Milken in the 1980s at his firm Drexel in Beverly Hills. And high yield used to be called junk bonds, but they don't call that anymore because it's tougher for them to market bonds that are junk. And so this here is basically high risk stuff. Like, for example, the hotels that were built in Las Vegas. And if you think about it, Las Vegas is a ridiculous concept. It's brilliant because it works, but it's ridiculous. Let's build a bunch of hotels in the middle of a desert. Oh, and let's make them the biggest hotels in the world. So a lot of the hotels that were built in Las Vegas were built using junk bonds, which is also called high yield bonds. Okay. So let's take a look now at some ETFs here. So if we go here to government bonds, okay. So here, this is a collection of government bonds you can invest in. Let me just pick a random one here. Okay. IBTH is the ticker on this one here. Hold on. Let's pick one that I can actually choose. IBTH. All right. It's being a pain in the neck. So what I'll do is I'll type in that ticker in Yahoo Finance. IBTH. Whoops. I did not type Tesla. IBTH. You saw me, right? Okay. So this here is a treasury ETF. Here it is here. Yeah. And you can learn more about it by clicking here for the profile. And you can see here, let me zoom in a bit so you can read this here, the fund summary. Okay. So this here is basically 2027 5-year US treasuries. Okay. So that's what's in that. And you can go to holdings here as well. And sometimes they provide here, sometimes they don't. So it's AAA rated debt, which is US government. And here's what's in there. Okay. These are the top 6 holdings, which is 29% of what's in here. Okay. US treasury notes. Okay. And bonds. And so we can see here that it's 100% of it is AAA rated. The way it works when it comes to bonds is there are companies like S&P, Moody's, and Fitch, and they will rate bonds for you, so you know how good they are. AAA is the highest, the best, Then it goes AA, then A, then triple B, double B, B, triple C, etc. I usually recommend considering investing after you do research on anything that's A or above. Anything below that is too much risk. Okay, so that is that one there. Let's go back now here to ETFs, and we looked at lower risk ones here. So let's now look at global ETFs. So let me click on this one here. This one here is IAGG. So we can click here, and let me actually, this one here, IAGG. All right, so we'll go here and we'll type in IAGG. So this one is an international bond fund. So you're buying debt from global governments. Okay, so let's look here at the holdings. See what's in this bad boy. So here we've got international debt from countries with solid economic fundamentals relative to the rest of the world. China, France, China again, France, Germany, Japan, etc. Okay, so that's this one here. And this one here is not AAA, the whole thing. Only 21% is AAA rated. Okay, and then you've got other ratings. But since it's not AAA rated, all of it, you should get a little bit higher returns. You should, slightly more in treasuries, global treasuries. Let's get rid of government debt now. Now what we're going to do is we're going to go and we're going to look at some corporates here, okay, or credit here. So these are more risky because they're higher up than this. Let's go up here and see what's in this dude here. This is CEMB, okay? And this is offered by JP Morgan. CEMB. Okay, we can click here now. Let's see what's in here on the BlackRock iShares website. There's just a wealth of information you can see here. So let's go to the overview. What do we have in here? Key facts. Fees, 0.5%. Here we go. Okay. So these are the companies that are in here, right? And these are high quality companies, but they're more risky. So Teva is a great generic drug company based. It's actually based in Israel, but it says for some reason that this debt was offered in the Netherlands. Okay, maybe they're trying to raise debt in Europe because they got better terms, or they want to use the use of proceeds for European capex. This one here is Saudi Arabia. This is Petrobras, Petroleum Brazil. Las Vegas Sands, I guess. I'm surprised the rate's not higher there. If that is Sands, Sheldon Kasowitz company in Macau. And then you've got other ones here as well. Okay. And Abu Dhabi Energy Company, etc. So that's that. And then we look at high yield here. The last one I'll talk about. This is more risky. So what's in here? So we click here and the ticker doesn't always want to work for me. Here we go. EMHY. And so you can even type this. Let me type it actually over here. EMHY. Make it more fun here. EMHY. I like using Yahoo Finance because it's easy, it's intuitive, and it's free. So what we can do is we can go and look at the profile here, and we find out, actually we can't find out information about this. Did I type in the wrong ticker? I thought I typed the right ticker there. Hold on a second, guys. EMHY. EMHY. Okay. EMHY. Okay. So let's go to the holdings. And we could see what's in here. So this is more risky debt. And so there's a petroleum company in Mexico. And here's the return. It's a lot higher because it's much more risky than investing in big governments or et cetera. Okay. So anyway, that's an example of a high yield fund. Okay, let me get back to other questions now. Okay. All right. And I'm getting a call. It's okay. I thought it was one of my employees. It says scam on it. Literally, it says scam. Yeah. I don't answer my phone anymore because it's anyway. All right. Next question is, I have a ton of questions, but I'll stop here so other people can ask as well. Looking forward to next week. Thanks, Ray. Appreciate it, Ray. Ray, ask as many questions as you want, please. And Kim wrote, thanks for all this, Chris. Take care and stay safe. Likewise. Thank you. Melody, great to have you on the call. Melody's been with us for a long time now on our weekly calls. First time I actually saw her in person was when we did a Zoom call on October 31st, 2019. That call lasted 9 hours straight. I didn't get up once. And she was on with her wonderful kids. And I saw them in their costumes before they went to out to Halloween that day. Yeah. And Melody is a teacher based in Atlanta. And she's in the process of writing a book using my free book template, which you can download on my website. And she's also making courses on Udemy. And then she wrote, hi, Chris, hope you're having a lovely day. Likewise, my course is ready to view. Woohoo! Awesome. Awesome, Melody. I know you've been working your tail off on this. That's awesome. So Melody's course is now up on Udemy. That is awesome. And then you wrote here, I've got a group of moms testing out to look for errors. The course is called Empower Your Child to Read. I'm going to go and check this out. Okay. I'm proud of you. This is awesome. You got it done. And everybody has something to teach. So let's go there together and check out, I'm excited, check out Melody's course. So let's go over to, and I'll do this here in incognito mode. I will go to Udemy. Oops. Udemy, go to their homepage here. Okay. And what we'll do is we will search for the name of this course, which is Empower Your Child to Read. Okay. Empower Your Child to Read, because readers are leaders. Here it is. Here it is. New. Very cool. Very cool. Oh my gosh, it's long. I love the logo too. That is awesome. Look at that, dude. Use portrait effect there too. Did you do that yourself using Photoshop? That looks great. I love it. I love it. Very cool. All right. By Melody Johnson. And this here is Melody. She has 9 students, and she's the CEO of Loving Literacy, an author on McGraw-Hill as well. Oh, cool. I didn't know that. Awesome. Very cool. Very cool. All right. So this course here, we're all going to watch the promotional trailer together. And I've got to figure out a way to get sound to work here. So give me 1 second, and I will play this in full screen. Hold on a second here. Go big. Go big or go home, they say.
This course is designed for you.
Actually, hold on 1 second. Let me get rid of my ugly face so you can watch this full screen without me. This is awesome. Awesome. Very cool, Melly. I'm proud of you. All right, I know you worked hard on this. Let's go here and let's watch it together. And let me crank up the sound here.
You to go at your child's pace. This course is designed for you to go at your child's pace and use phonemic and phonological awareness strategies like blending, letter isolation, alliteration, rhyming, and more. Using the materials, various strategies, and videos consistently will help you and your child to see results. This course is great for beginning and emergent readers that struggle with letter and sound recognition and with building simple CVC words. With the literacy activities that we've included, your child will be able to recognize and sound out letters with a variety of phonological and phonemic awareness activities provided. They will also be encouraged in the videos to have fun with the letters. We support parents and children through the curriculum by offering easy-to-use literacy strategies that are easily accessible. The ideal student for the course would be a beginning or emergent reader, someone who cannot recognize letters, letter sounds, or create simple CVC words by blending those sounds together. As a former teacher of over 10 years of experience in education and certified in special education, general education, and literacy, I designed this course in mind for the parent that wants their child to gain a love for reading, but has a hard time getting started. This simple course that was created lays a successful foundation for you and your child to gain a rewarding experience in reading. Feel free to look through my course description. I look forward to seeing you in this course. Happy reading!
Awesome. Awesome, awesome, awesome. Very, very happy for you.
Hi, and welcome to...
Great job. Great job. I love it. I love it. The audio, let me check out the quality here.
If you have any questions during this time, please be sure to click the tab below.
It looks great.
And leave a question, and I will get back to you.
The audio is awesome. I don't hear an
You
echo.
can send me a private message.
And I love the backdrop as well. This is awesome. And I know you've been working really, really hard on this. This is incredible. And Melody's using a Canon M50 camera and a shotgun mic, I think, as well, right? So that's great. The audio quality is great. The video quality is awesome as well. Yeah, I'm happy for you. I'm happy for you that you have this. So I'm going to go and buy this course today after I'm done here. And if anybody wants to empower your child to read, then buy this course as well. Let's all support. Let's all support a Melody here. Great job. Great job. I'm excited. I'm happy for you. Very cool. Very cool. Congratulations. I love it. I love it. Okay, cool. Next up, we've got Kundan, who's saying, hello, Chris. According to you, why do you think there is a huge gap between the United States and Canada in terms of pay scale? Even if they are the same company, but in Canada, a company earns less. Yeah, and it kills me and it drives me crazy. So when I used to work in Canada, I worked for Accenture. And my first year, I made $19,000 a year. And I lived in Ottawa back in '94. And I lived well on 19. It was great. It was great. Like I rented this little place in Sandy Hill in Ottawa. I had my Toyota Camry. I made car payments. And I went on vacation to Puerto Vallarta. But I didn't save that much. I saved a little bit for my Canadian Retirement Savings Program, RRSP. But it killed me because what happened was in the United States at Accenture at the same time, people were making 35 to 40 grand a year. And I asked about it. And one of the reasons was because, well, the cost of living in Ottawa is lower than places in the US. And I looked into it in more detail and I couldn't get good answers because it was illogical. And then what happened was, I remember, I think it was in the mid 90s or so, the Canadian dollar was at par with the US dollar, meaning one Canadian dollar is worth one US dollar. And so I thought things would get better, but they didn't. And I remember I went to, there's a place in Canada that's like Barnes & Noble, a bookstore called Chapters. And I remember looking in the hardcover books And I would see on the inside flap the price in Canadian dollars and US dollars. And the price in Canadian dollars was still way, way higher. And everything was still more expensive. And it's not fair. And I don't know why that's the case. I think it's ridiculous that companies would want to gouge Canadians, or companies would want to underpay Canadians. So if you work at a Canadian company that's headquartered in the US, and you're not making as much as your US counterparts, then I want you to rally as many people together as you can and approach HR and demand a change. I know that sounds out there, but it's not fair, and somebody's got to make a stand and say something about this. So it is ridiculous. It is, and a lot of times American companies will use Canadian companies as a guinea pig, so to speak. Like what they'll do, because, and I don't think it's a terrible thing in all cases, but a lot of American companies think of Canada as kind of representative of the U.S. economy, but it's a smaller. So what they'll do is they'll experiment with new business models in Canada, or what they'll do is they'll experiment HR-wise with new titles for employees. And if it works out well, they'll deploy it across America. Yeah. But enough is enough, though. Like maybe call your local member of parliament, your MP, which is a Canadian version of a congressperson, and demand change. Yeah, because it's not fair. Same thing with cars in Canada. It's always more expensive. Everything you buy, even when I go to Walmart in Canada, it's more expensive. I just don't get it. It's not fair. Okay. And then Kundan wrote here, I'm also excited for your management consulting course that you mentioned a few weeks ago. When can we expect that course? Yeah, still in works. Still in works. Yeah. And I had a consulting course on Udemy years ago, but I pulled it because my ratings were awful. It was one of my earlier courses and the quality sucked. And I had a rating, I think, of around 4 or low 4. So I pulled it. And I took a bunch of courses down from Udemy recently, my older ones, where the reviews weren't that great. You know, it's educational Darwinism. You know, my students voted, and they voted those courses out because they had awful ratings. So I removed them. And so I'll be replacing them with higher quality versions of those courses. Yeah. All right. Anil's saying, good morning, Chris. Good morning, Neil. I've sent my cover letter and resume to an employer of my desired company. I have previously never met with this human resources person. Unfortunately, she has not replied to my email so far. Can you please dictate a humble follow-up email so that I can ask her to have a look at my resume and email me? Yeah, I would keep it really, really short. Less is more, and use the word please, thank you. And I'd probably say something like this. If you exchanged emails already, you can reply to a current email. You can say something like this. And you said it's a her in HR. You can say, Joanne, hope all is well. I hope that you and your family are healthy. We are doing fine here. Thank God, period. Please let me know if you get a chance to provide me with some feedback on my resume. Thanks a lot and have a great weekend. Neil. That's what I would do. Yeah. And if they don't respond to that, give it a couple more weeks and then call and get them live. Don't leave a voicemail. Yeah. Okay. Next up is Manas. And Manas, thank you very much for all your support this past week on social media. I appreciate it. Manas is writing, good morning. Hope all is well. Likewise. Greetings from my side. I graduated from high school this Friday with a 91.25%, holy crap, and 84 in accountancy. Good for you. And you wrote, good for me. I thought of sharing this with you all. Thanks, and more to come. Awesome. I love it. Amazing. I didn't realize you're in high school. It's amazing. You're a prolific writer too. You write incredibly well. 91%. That's amazing, dude. Incredible. I'm happy for you. All right. Next up is Nishant is saying, hi, Chris. Hey. I started out reading books a few years back, starting off by reading motivational, positive, and inspirational books. After maturing with time and focusing on the implementation side, and you wrote continued. Where's he where it continues? I think I need to read more about technical books. I felt so amazing after finishing your complete MBA course. Thank you. Around 2 months back. And now I want to know more about the actual running of a business. Yeah. Yeah. So, and then you wrote here, I want to thank you for answering my question in episode 96 of Weekly Webcast. I just finished reading The E-Myth by Michael Gerber, which focuses on creating systems for your business. Yeah. Yeah. So I would say the next one to take is like take my MBA degree program if you want to. There's a 30-day, 100% money back guarantee. And I teach you about how to start a company and how to execute it and much, much more as well. Yeah. Thank you. Thank you for that feedback. Appreciate it. Okay. Let me scroll back up. Bunch of questions here. Manas is saying another greeting. I got my diploma in French degree last Sunday. Time is going good. Excellent. And then he wrote, by the way, my book is coming. I hope I'll be on time with it. Awesome. Awesome. And when it's ready, let me know because I'm going to buy it and you can't send it to me. It doesn't work that way. I will buy it on Amazon. I'll support you. And Manas is saying, what if all the debenture holders, meaning debt holders, of a company ask for their money altogether? Yeah. Well, I mean, contractually, if they're allowed to redeem early, they can do it. But there's usually legal language that they might not be able to do that all at the same time, right? And it has to make sense for a company or a bank to demand their money back. Right, there has to be a good legal reason, otherwise lawsuits could start. Yeah, I'm not a lawyer, though. I would talk to a lawyer first about that. But usually what happens is when a company goes bankrupt, the people who get their money back first, meaning those with a senior claim, are the debt holders or the bond holders, same thing. Then the preferred shareholders, because as the word implies, they have preferential treatment. Then the lowest of the low is the common shareholders. Okay, and whenever you and I buy a stock, in the stock market, we're almost always common shareholders. Yeah. Next question is, do you think that accountancy that we learn in school is good enough for us? And then you wrote, I don't think so. Yeah. I would say that one of the few things in business that's not common sense is accounting and finance. And so I think it's a good thing that you study it because it is the language of business. But when you study it, make sure you understand why things are the way they are and question everything. Like when you look at a balance sheet, question why is it called a balance sheet? Well, it's called a balance sheet because like a scale, the stuff you have has to equal how much of that you own and how much a bank owns. The stuff you have has to equal how much of it you own and how much a bank owns. For example, a house is something you have. You own part of the house and the bank owns the other part. A house is an asset and you have equity in your house. Equity means how much you own, and you have debt as well, a loan from the bank. So assets equals equity plus liabilities, and it has to balance. So think about things that way if you can. And whenever you look at ratios within finance and accounting, I want you to think of it in terms of the denominator is always 1. What does that mean? Well, net profit margin, for example, is the following equation. The numerator is profits, and the denominator is sales. So that means, remember the denominator, think of it as being 1. For every $1 in sales you have, how many pennies of net income are you getting? Higher is better. So if a net profit margin is 30%, that means for every $1 in sales you have, you're making 30 pennies. So think of it that way. Just try to really understand it. Otherwise, it'll be a nightmare for you. And I'm victim of this because I got a D in accounting when I took it at McGill University in my first year back in the early 90s. I am that old. And I got a D because I was trying to memorize stuff and not understand it. So I had to take it again. And my fault was when I was in high school, I did okay, whatever, I did well because I memorized stuff. So in high school, you can memorize stuff. And then when you get to university or the real world, you can't memorize stuff. You have to understand it. And once you understand it, you'll never forget it. And it's so much more fun to learn too when you understand stuff and always question why.
Next question is from Kundan, who's saying, can you tell us more about the Tiger Cub hedge funds? I want to know what technical and soft skills are needed to get there. Yeah. So there's a brilliant man who kind of pioneered the hedge fund industry, and his name is Julian Robertson. And he's from the great state of Virginia. And he now, I think, spends most of his time on a golf course in New Zealand. And the reason, by the way, he created that golf course in New Zealand was because in the early 80s, he was worried during the Cold War about thermonuclear war, global nuclear war. And he analyzed the cloud patterns. And the last region on the world to get impacted in a nuclear fallout would be New Zealand. Okay, that's a side note, though. But he started this great hedge fund, Julian Robertson did, called Tiger. And the reason he was incredibly successful and way more successful than other hedge funds is because he's very long-term focused, right? And they make 3-year bets, right? They invest longer term. So they focus on fundamentals. And as a result of them being long-term focused, and they focus on fundamentals first, valuation second, and maybe technicals, maybe, just in terms of when to put on a position or book a little bit of profits. But they spend a lot of time looking at fundamentals, and they do deep research. And Tiger was so successful that what happened was, out of Tiger, a lot of employees started their own hedge funds, and they called those Tiger Cubs. And so there's companies like Maverick, and there's plenty of others, Blue Ridge, etc., which are from people that started at Tiger. And they're the best hedge funds to invest in usually, and work for too, because they're Tiger Cubs. And we know, as Mr. Buffett said, the longer the view, the wiser the intention. And that's certainly something that these Tiger Cubs all have in common. Okay, and I have a course on Udemy about picking stocks and hedge funds. You can take that. That might help out as well when you think about applying there. Yeah. All right, next question is, what if you were Andy Grove? What would have been your reaction on the Intel chips? Yeah, and so Manas is referring to the late, great Andy Grove, who was the co-founder of Intel and was also the CEO for a long time. And Manas is referring to something that happened back in 1994 with Intel. So, and this is a case study I have for my MBA degree students. So back in 1994, Intel, which makes the brain of the computer, these things, the processor, back in 1994, Intel discovered themselves that this chip here, okay, this is a Pentium chip. This is the exact model here. This chip here had a floating point decimal problem. Basically what that means is this. If you had really big calculations, they might be off by 0.0000001% or something like that. Which can be catastrophic for drug companies or other companies that process a lot of mathematical stuff using this chip. And so what Andy Grove did, and he wrote about this in my favorite business book ever called Only the Paranoid Survive. But what Andy Grove did was he got in front of it. And I believe that transparency builds trust. And so what he did was he went on all the talk shows. He went, and CNBC, I think, Report on Business. I remember watching that late one night, and he was interviewed in 94. And he said, we have a problem with our chips. And as a result, we want to let everybody know that we're going to give you 100% refund and replace it with a chip that works better. If you want, you can let us know, and we'll immediately send you a new chip. And the unintended positive consequence, or lack thereof, of doing this from a PR perspective, the damage control, was a lot of people were watching this thinking, I don't know what the heck what the brain of the computer, what is this? I've never opened my computer. I don't know what's inside this thing, but this guy seems really ethical and honest. And his company is called Intel. Okay, which makes the brain of the, I trust this guy. So it was brilliant disaster control or whatever, PR, from a PR perspective, he did a great thing. So my reaction would have been along the same lines. I'm never going to be as smart as the late, great Andy Grove. But I do believe in full transparency, because transparency builds trust. And the only thing you take with you from one company to the next in your career is your reputation.
And as Warren Buffett said, it takes 20 years to build a reputation and 5 minutes to destroy it. So just be careful. Be careful and always disclose everything. And when you're selling a product, even disclose all the material risks. And your lawyer will help you with this as well if you're trying to raise money. Always disclose the risks. It's just the ethical thing to do because transparency builds trust. Okay. All right. And then Kundan wrote here, I guess we don't need to know the qualitative trading to get into a Tiger Cub as their long-term focus, right? And you wrote, right, or do we? No, you don't. You don't. Unless you want to be a trader working at Tiger. But I think that role is going to be disintermediated to technology will take over that role at some point. Yeah. Yeah. Okay. And then Manas wrote, thank you for answering all my questions patiently. My pleasure. And you wrote, I hope you'll forgive me for the silly questions. No, dude, they're great. I can't believe you just graduated high school. I mean, dude, your questions are unbelievable, off the charts. Yeah. And then you wrote, I said, I hope that episode number 100, which is next Thursday, will be a wonderful one. Let's make it historic. We will all be with you forever. Thank you. Thank you. And you wrote, God bless you and your family forever. And God bless you way, way more and your family way, 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 way more. And I love that little emoji you put there. So blessings back to you as well. Thanks. I love my students. Okay. Okay, next question is, what are the various jobs on Wall Street? Yeah. So what I would do is I recommend checking out my complete financial analyst training program because that course will tell you all about the jobs on Wall Street. And here's a little bit more detail on the different jobs using a trailer from a course I made. And I made this trailer over in the Czech Republic. This will be fun.
Welcome to MHS. Congratulations! MHS stands for Morgan Haroun Sachs, which is the world's #1 pretend finance company. Come with me. You will go through our Financial Analyst Training Program Bootcamp. Here you will learn a lot about finance and investing, with no theory. You will rotate through the many divisions of our firm, and we will discuss how to excel in 14 different financial analyst roles. I will also help you understand which finance role you're most passionate about, and how to get hired and promoted in the industry. You will deal with the employees and clients of our firm in edutaining, meaning entertaining and educational interactive case studies, including how an IPO works, how to manage risk, and how to manage a portfolio. You will create incredible investment research reports that will impress the heck out of anyone in the finance industry. This course is for anyone who wants to be a financial analyst or a better investor, stock picker, portfolio manager, and more. No prior experience is necessary. It includes a comprehensive Excel template to help guide you through our training program. In addition, I will teach you Excel skills so you can model financial statements and value companies from scratch. This course is based on my many years of experience. I'm an MBA graduate from Columbia University. I've gone through the Global New Hire Financial Analyst Training Program at Goldman Sachs in New York, London, and Tokyo. I've worked for top hedge funds, and I even started my own hedge fund and venture capital firms. This course is more than 22 hours long. This is the most thorough financial analyst and investing course available on the market. The student reviews have been amazing. Welcome to the Morgan Haroun Sachs training program. This will be a lot of fun. I'll see you in the morning.
Okay. Next up, I've got a question from Coordinate Vandalism. That's the username here. Hopefully it's cool vandalism with positive commentary and stuff if you're spray painting. Okay. So how can you secure your place on Wall Street? So I really do believe that relationships are more important than product knowledge, and your network is your net worth. And so what I humbly recommend doing is reading my free networking book to learn more about this. And you can learn about this by going to my website, which is harouneducation.com, where you can download my free networking book. Just scroll down right here. I promise you it'll help you out tremendously. It's free. It's over 200 pages with several hours of YouTube video links as well. Yeah. Okay. All right. Yeah, and I think that's more important than anything else. And you wrote here, what about good grades? Yeah, grades are important, I guess, too. But I think what's more important is your ability to network a lot. Yeah. So relationships are more important than product knowledge. Please read that free book, the networking book. I promise you it'll help. And it's free. It's free. And you can also take my complete job course because I think it'll help you tremendously as well to get the job of your dreams. I guarantee it, and you have a lifetime money-back guarantee on it. It's only $9.99. Go to my website or Udemy to learn more, please. Thank you. All right. Now I lost my spot. Hold on one second. All right, hold on. I'm going to do a search, Control F on your name, see if it comes up. Whoops. Yeah, give me 1 second, guys. I'm so sorry. It happens sometimes. It jumps when I get a gazillion questions at the same time. All right. Okay, here we go. I found it. Okay, great. And if I missed anybody's question in between, please just paste it again. Okay, so Siddharth is saying, hi, Chris. I want advice. I'm fresh and finding a job during the pandemic is hard. Lately, I've been feeling depressed. I'm sorry about that. About my life and my future career. And also, I've been procrastinating things. Yeah. Well, I'm sorry to hear that, Siddharth. Yeah. So I think the best way to find a job is to network a lot. And you can go to my website, harouneducation.com, and actually send me a message directly over LinkedIn, please. And I'm going to give you a free coupon for my complete job course. I promise you it's going to help, okay? I promise you. And don't worry, okay? And I'll also provide you with a number of other free. Actually, I'm going to give you my MBA degree program for free. Okay, just send me a LinkedIn message, and then during the MBA degree program, I will give you one-on-one advice. Okay, we'll talk as well for free. Okay, so I'm going to give you free access to my platinum program, which is $14.99. But just send me a message, please, over LinkedIn. Okay, and I want to help. Okay. Next up, we've got Hassan who's saying, hey, Chris, what would be your advice for someone on how to best go about getting a job in another company, meaning applying from overseas? Yeah. So I would check out my complete job course because it goes into a lot of detail on how to network and turn your weaknesses into strengths. Perception becomes reality. I think, therefore, I am, like the Rodin sculpture. But I really do think you have to have an amazing LinkedIn profile, an amazing resume, and also network on steroids. And so take my course, the complete job course, and that will help you out tremendously. I promise you, or your money back. Yeah. Okay. All right. Next up here, Jason is saying, hey, Chris, hope you're doing well. Likewise. And then Manoj is saying, and then Vikas wrote here, I hate myself, ... Yeah. If you want to provide more details, I don't know you, but I love you. Okay, just provide me more details. I'm happy to humbly help in any way I possibly can. Yeah, just type it here, please. Yeah, thank you. Yeah, and God bless you, and I will pray for you. Okay, next question is from Manoj, who's saying, greetings, Chris. I hope you and your family are doing well. Here are my questions for this week's webcast. Thank you. Manoj wrote here, which is the best suited specialization for entrepreneurs in MBAs? Yeah, so there is an entrepreneurship track you can take in most MBA degree programs. In my MBA degree program, the 5 core courses for the core curriculum are as follows. There's personal growth, SMC, which is sales, marketing, and communication, EMS, which is economics, management, and strategy. Then there's FA, which is finance and accounting. And then there's entrepreneurship as well. So you can focus on entrepreneurship in most MBA degree programs. We certainly do a lot of that in my MBA degree program. And you can go to my website, Haroun Education, to learn more about my MBA degree program. Now, what I'm doing this week with my MBA students is we're going through a venture capital boot camp. Okay, and that's why you see a lot of these props here, right? So it's like I'm a drill sergeant, but put a nice one, please. And we're going through, there's a company, a pretend company, and you can see it on my shirt here, Shark Virtual Reality, and the poster there. And I'm teaching my students on how to launch a company. And I have a bit of war as an analogy. I don't want to overdo it, but I have a great quote from Sun Tzu in his book, The Art of War, which is every battle is won before it's been fought. And so I humbly teach my students how to launch a company from scratch. And we go through this boot camp. And if you're in my platinum version or gold version of the MBA degree program, I have hundreds of hours of Q&A using Zoom as well. And if you're in the highest end version, my platinum program, you actually get several hours of one-on-one time in person or over Zoom. And you can go to my website to learn more about my MBA degree program. Let me show you that really quickly. Okay. So if you go to my website, harouneducation.com, and if you click up here on MBA degree, you can learn here about pricing and frequently asked questions. So basically, the lowest end version of the MBA degree program, or I should say the cheapest version, is $499. It's a one-time fee, and you can enroll today. It's called Silver, the Silver version. And there's over 300 hours of lessons, brand new lessons that I record using 4K and 5 or 6 camera angles. And there's a 30-day no questions asked, 100% money back guarantee. And you can start right away. And the price of this is the same price for literally 1 hour of education at MBA schools, traditional ones that are expensive. And there's a 30-day money back guarantee. You got nothing to lose and everything's a gain. You can even take the whole thing within 30 days or a lot of it and just get your money back if you want. Okay, and I find that I get about 1% of students overall request money back in my courses and in this program as well. Then there's something called the gold version. And this one here, you can't start today. You have to apply to it. And it starts every December. So this one here, the application deadline for early acceptance is August 15th. And this one is exactly like this, except you get several hundred hours, literally, of live Q&A after each topic. This one here is called the Platinum Program, which is identical to this one here. It starts every December, it lasts a year, and you get several hours of one-on-one time as well. Now, currently, with my current program that started in December last year, it's a one-year program. My current students, initially I had 160 people sign up for the Platinum Program and 2 asked for their money back. So we have 158 students now from 41 countries. So you can go to my website to learn more about this. Yeah. And we're actually going to be sending out, I think in the next week or so, some acceptance emails to some of the students. Yeah. The earlier you apply, the better. It is a rolling admission basis, which means the earlier you apply, the higher chance you have of getting in. If you have other questions about this, you can go here to FAQs, or you can read here student testimonials, contact any of my students if you want to. You can see their LinkedIn profiles, etc. And this year, I got to give a shout out to a great student named Vital. And I guess I'm logged out in that version. So let me go back here to my Chrome version here where I'm logged in. Haroun Education Ventures. But I want to profile Vital. He's the best. He's great. I love all my students. So Vital is one of my students. I actually met him in Berlin last year at a Udemy event. And he's from Rwanda originally, but he lives now in Stuttgart. I used to call it Stuttgart, but he told me, no, Chris, it's Stuttgart. Okay. And he is fluent in French as well. And he and I are actually creating a new version of my course on Udemy called an entire MBA in one course. And we're doing it in French. And he speaks much gooder than I do in French, but I'll be doing that course with him. And the use of the proceeds will go to him, as well as to finance a school that we're creating in his hometown in a place called Magoo in Rwanda. Yeah, so we're building it together, and we're supposed to go to Rwanda. We're supposed to go this December, but because of COVID, it got delayed. I'll go early next year with him. Yeah, but he's great. He's great. Yeah. All right. All right, let me go back here. Okay. All right, next question is, and Pratik is saying, hi, Chris, have a nice day. Likewise, thank you. And you wrote, my question is, as many people find that Indian education system provides outdated knowledge to students and make more emphasis is paid towards a particular exam, what can we do? What can we as common people do? Yeah. I know what you mean. Like most MBA schools are outdated as well. Most curriculums are, to be honest, at universities. Universities teach you stuff that you can't apply in the real world unless it's medical school. And so people that do an undergraduate education in the United States or globally, sometimes it's $100,000 they have to pay, which is ridiculous, especially now because you can't even go to school because of COVID, whatever. But it's $100,000. And there's only 13 hours of class a week. And you don't learn stuff you can apply in the real world. And the same problem we have with MBA schools. Almost every MBA school, like Harvard Business School, HBS, 2/3 of HBS is BS. You can't say that about Haroun Business School, okay? Just Harvard Business School. But what happens is you graduate from top business schools and you think you know how to start a company. You don't. You think you know how to manage your own money. You don't. You learn how to manage other people's money. You think you'd learn how to present. You don't. You think you'd learn how to interview. You don't. You think you'd learn how to sell. They don't teach you that. You think you'd learn to analyze companies by looking at the quality of the management team first before anything else. You don't learn that, and so much more. And so I pride myself on teaching people based on my real practical experience with a 30-day, 100% money back guarantee as well. Now, when it comes to what you want to learn, and you're mentioning here that in India, which is similar to every country in the world in terms of education is theoretical, I recommend taking online courses. So you can retool, and it doesn't matter how old or young you are. If you want to learn how to program, you can take great courses. And let me show you some examples of other people's courses. I don't want to pitch my own stuff here, okay? And I don't get compensated for ever mentioning Udemy stuff. It's an algorithm. If my course suck, which a lot of them do, they just won't sell. But let me go here into a new incognito window. Let's go to Udemy, and I'm going to show you courses that you should sign up for. And it doesn't matter how old or young you are if you want to learn how to code. There's this amazing woman right here, Dr. Angela Yu. She's great. I met her in Berlin at the Udemy live event I think it was last October, November. And she's larger than life. She's really tall. She's big. Yeah. But she was a doctor, and she wasn't happy doing what she was doing. She's from England, which means she speaks gooder than me, like all British people do. And so Angela started teaching how to code. And her courses are really long and amazing, great value. Look at this, for $14.99, and you can get a money back guarantee over 30 days. You get 54 hours, and this will teach you how to create a website from scratch and do more advanced stuff as well. And she's brilliant. She's absolutely brilliant. She's awesome. But you can retool. But I recommend this course and anything she teaches. And her ratings are way higher than any ratings I'll ever get for any of my courses. Don't take my courses, take hers. Another great guy to learn about is Rob Percival, learn from. And he was at Cambridge, and he was a math teacher too. And because he's British, he also speaks gooder than me. And you can also take his courses, right? Look at this one here. 257,000 students have taken this. It's a great course. It's a complete web developer course. He's awesome. And you can learn how to code. And there's Rob here, and he mentored me actually. I went over to Cambridge and spent some time with him. He helped me out a lot actually because I asked. You have to ask. So anyway, take courses from these people if you want to learn about technology. Yeah, and again, he speaks gooder than me, and so does Angela because they have British accents. Okay. And why is it that people with British accents can do a great American accent and do well as actors or actresses? Why is that the case? It's amazing. There are so many incredible British actors and actresses that make it big in Hollywood with an American accent, right? Why can't Americans do a British accent? Maybe Johnny Depp can, I don't know. But it's just, you don't see it as often. So anyway, the British do speak gooder than me. Okay. And Manoj is asking, how can I conduct a successful market research for my startup? Yeah. So I recommend taking my complete business plan course on Udemy because failing to plan is planning to fail. And I'll go through really in-depth process of how I analyze companies. And I actually do research on the market in general. But other ways you can do it quickly are as follows. You can do a search for consulting reports on a certain industry. Sometimes McKinsey will release part of a consulting report for PR reasons. McKinsey is a great consulting firm, and you can read it up there. Or you can read research reports from other companies that specialize in certain sectors. For example, in technology, there's a company called Gartner and another company called Forrester, and they make great research reports. And Gartner has what's called a magic quadrant. It's like the Boston Consulting matrix, whatever, sort of, where you can look at market share for companies or how good they are, and they chart it. I'm not doing a good job explaining this, but the Gartner has those magic quadrants you can check out. You can also go to sec.gov and read annual reports for companies in the sector you wish to do business in. And they'll disclose all the material risks as well, and a lot of qualitative and quantitative data as well. You can also listen to quarterly earnings calls from publicly traded companies. And you can watch their Analyst Day events as well, which are webcast. And you and I have the exact same information at the same time that all the professional investors do. It's part of a U.S. regulatory code called Regulation FD, which Eliot Spitzer, who was a senator from New York in '02, created. Regulation FD stands for Regulation Fair Disclosure, so that you and I, regardless of where you live in the world, have the exact same access to information at the same time as the professional investors do. Okay, next question is, does going to an elite college make a difference in someone's career? And would someone who didn't go to an elite college still be as successful as someone who did not? Yeah. So I think that it all comes down to your ability to network regardless of where you went to school. And it's really unfair because a lot of times really rich people, for some reason, their kids go to these great colleges, even if they didn't work hard to get in there. I think the system is somewhat rigged in many places. Why is it? Why is it that very successful people or politicians, or why is it their kids go to great schools? That's not fair. I mean, if they worked hard and earned it, that's cool. But otherwise, it's just not fair. And I find that a lot of times that people that go to great schools, there is kind of like an entitlement, and they're not as hungry by the time they graduate because I think the world's going to come to them. And so I prefer in investing in and hiring people that are poor, smart, and hungry. And I don't care if you have an education or not. One of my employees, who is an awesome producer, doesn't have a degree. I don't give a damn. All I care about is, their ability to do a job with a positive attitude and make a difference. So how do you compensate for not having gone to Oxford or Cambridge or whatever? You do it by networking, and networking aggressively. Now, there's so many stories of amazing people that don't have an education that started in the mailroom and they became CEO or became very successful. You want examples? I got plenty. One example is Sidney Weinberg, who started in the mailroom at Goldman Sachs, and then he became CEO eventually for a very long time. Another example of this is Simon Cowell from American Idol. He started in the mailroom. You also have, who else do we have? David Geffen, who owns Geffen Records. He started in the mailroom as well, and he's part of DreamWorks. He owns it with Katzenberg, as well as Steven Spielberg. There's also the former president and editor-in-chief of Cosmopolitan. She started in the mailroom as well. The former president of ESPN started in the mailroom as well. Barry Diller, from his internet media empire, Interactive, he started in the mailroom as well. The list goes on and on and on and on. Why? Why is it that somebody starts in the mailroom can make it to CEO? Why? Because they network. Relationships are more important than product knowledge. Your net worth is your network. So you have the person in the mailroom that will stop by your cube and say, top of the morning, it's you. And here's the mail. Did you see the game last night where the Toronto Blue Jays beat the New York Yankees again, like they always do? I'm from Toronto. I got to represent here. They network. You see, they network a lot, and they're friendly. And so you got to become that person as well if you're not already. How do you do it? Well, the best way to network is to, and I have a book that's free on this actually. Let me show you how you can get it. Go to my website, harouneducation.com, and then just scroll down and you can get my networking book for free. It's a couple hundred pages, and there's also several hours of YouTube videos I made for you to teach you how to network. Because I promise you that if you network a lot and you fail a lot, you don't give a damn what people think of you, and you keep trying hard to network over and over and over again, that you will run circles around these entitled kids that graduate from the Oxford or Cambridges of the world who only got in because their parents went there or donated a building. And it's a pain point for me. Like it absolutely kills me. Like the whole USC scandal. It kills me. And what happened with USC, if you're not familiar with this, is there's a couple of celebrities and their kids went to USC or got in because the parents bribed somebody to basically write a letter of recommendation and the essays and lie that their kids were on the rowing team and stuff. And those are just the ones that got caught. I mean, there's so many people, wealthy people, that I'm sure have done the same thing to get their kids into these elite schools. I want somebody that's poor, smart, and hungry, and with no entitlement. And I want to do whatever I can to help them make their dent in the universe. And these are the type of people I like to hire as well. It's unfortunate that the educational system is rigged globally. I don't think that just because your zip code or postal code or who your parents are, that you should get an opportunity to go to an elite school. It's not fair. I believe that education should be available and affordable for everybody online all over the planet. And this was the subject of my TEDx talk, where I said that T can fix all problems. TEA, technology, education, and acceptance. The bottom line is that if you network a lot and network aggressively, you'll run circles around these people that were born with a silver spoon in their mouth that didn't deserve to get into Harvard or Oxford or Cambridge or Yale or whatever elite school it is. Of course, there are some people that are born into money that work their tail off. And yes, they deserve to get in. But education, the system is rigged. It disgusts me. And I want to humbly do my part to make a difference by offering affordable education to everybody in the world, always with a 30-day, 100% money-back guarantee. All right, next question we've got, that was kind of animated there, but it's certainly a big pain point for me, and I want to make a difference. And everybody's goal should be, by the time they leave this earth, to make the world a better place in any way they humbly can. I'm trying. Hopefully I'll make a difference one day. Okay, next question. Pratik is saying, I'm lucky enough to know about Haroun's MBA degree program. I will be in good hands if I join it. Yeah, no, thank you. I appreciate that. And we're sending out acceptance letters. Actually, what I've done is I've recorded videos for people. Let me show you, actually. I want to share it with you. I'm still working on it now, but I've recorded 150 videos for the first 150 people that are getting into the Platinum program as well. But let me actually go here with you. I'd love to get your feedback. Let me know if there's any issues with the video I'm about to show you. Okay, so I'm going to show you here. I'm going to add it here so you guys can hear the audio properly. Okay, coupons, press. All right, hold on one second. Oh my God, I'm being such an idiot here. Here it is. Oh, here we go. Welcome Platinum. Yeah, these are some of the people's that are getting accepted, and I'm sending these out soon here. It's killing me because it won't let me show it here. So what I have to do is I'll play it and then I'll patch in the audio this way. The quality won't be that great, but what the heck. But I'd love to get your feedback, please, if you can, on if you understand this message properly. I'm asking for feedback here. So here are my renders. So these are the students that I've accepted so far. They're going to be getting their
they're going to be getting this video email soon. Okay. All right, hold on. Here it is here. All right, so let me go full screen on this. And then what I'll do is, all right, I suck at technology today. The problem doing these live webcasts, army of one, is I screw up a lot.
The MBA degree program.
So what I'll do is
Antonio.
I'm going to get my face out of the way here, and I'd love feedback from you, please. Yeah. So here we go.
I hope all is well. Antonio, I hope all is well. I want to personally congratulate you and welcome you to the MBA degree program. And so the program starts on December 14th of 2020, and it lasts 1 year. You've been accepted to the gold and the platinum versions. It's up to you to decide which one you want to take. And so the gold version means a couple hours of class every single day in 2 different time zones on Monday and Tuesday, plus several hundred hours of Q&A time with me as well as with your fellow classmates. And so those classes are on Mondays and Tuesdays, starting at 9 a.m. for time zone 1 and going until noon and maybe a couple hours longer with Q&A. So that's Monday and Tuesdays. And then on Mondays and Tuesdays, time zone 2 is at 4 p.m. for several hours plus a couple hours if there's demand for Q&A. And it's live Q&A again with all of your fellow classmates. Now, there's also a replay available of all Q&A. So if you missed the Q&A, you'll be able to catch up as well if that's something you're interested in watching. Now, you can watch the lectures live, or you can watch a rebroadcast of them, which will be saved online for you to access forever. Now, the difference between the gold and the platinum version is the platinum version also includes several hours of one-on-one coaching from me, either in person if you're here in the San Francisco Bay Area, or we can do it over Zoom online. And so once you make your payment, then you've secured your spot. There's been a lot of demand. And so you have a 30-day, 100% money-back guarantee 30 days after the program starts. So that means on December 14th is day 1. By January 14th of 2021, that's the last day to get a 100% money-back guarantee. Now, in this email that I'm sending you, I've also provided you with a link to the current gold and platinum curriculum that I'm doing this year with my current students. We've already done several hundred hours of live Q&A. It's been a lot of fun. And you might be wondering why I have this here. I'm doing a case study right now, actually, during class on venture capital. And also in the second half of the MBA degree program, what we do is we have this venture capital boot camp so that I actually coach all of you on how to start a company and how to execute and how to write a great business plan, et cetera, and so much more. And that's why you see these exhibits here. I changed the backdrop every single class just to make it more fun and enjoyable, et cetera. So I'm in the middle of the venture capital boot camp where I'm actually teaching my students that are currently enrolled in the gold and platinum version of the MBA degree program on how to start a company. I have a lot of experience in venture capital, having done this in the past. Now, if you have any questions, please look at the FAQ link in this email. And if the question's not answered, then just reply to this email, and I'm happy to answer any questions you might have. And so, Antonio, we start this December 14th, 2020. Thank you.
All right. So the acceptance emails are going out with a customized video for each person that got in. So if you're curious about this application process, you can go to my website. I'll show you where it is. And again, it's a 30-day, 100% money back guarantee for 30 days after you start the program. So let me go over here and I'll show you. Just go to my website, harouneducation.com. And then you can go over here to learn about the MBA degree program, including student testimonials, the pricing and the FAQs, and the different versions of the MBA degree program, which starts at $499 per this chart here.
These are the FAQs. Go to my website. Again, click here on online MBA degree program to learn more. And thank you as always. All right. Okay. Next up, the question is, hello, Chris. I hope all is well with you. Likewise. I have had some issues regarding the bio. My second employee is not loading the bio information. I'm getting the error message, REF. Please help. Yeah. So what I recommend doing is asking in the course, whatever course it is you're taking of me, and then we'll respond within 24 to 48 hours. Yeah. And a company is only as good as its customer service. And I'm humbled to say I have the best employees, and we tend to respond really, really quickly. In fact, when I gave away 1 million free courses in the month of March, I felt bad because my business started picking up because people were staying home. And so I think if you're not part of the solution, you're part of the problem. And so I gave away 1 million of my courses. And what happened was I was flooded with tons of questions from the free students. And so I hired a couple more people to help answer questions with me. And we do respond always within 24 to 48 hours. Thank you. Okay. Okay. Next up is Vikas is saying, and by the way, if you're not getting help with that question, and you sent it in on whatever platform you're taking my course on, send me a message over LinkedIn, please. And I'll remember your name here. And I'll create a video response customized just for you to walk you through this issue. Thank you. All right. And Sankeet is doing thumbs up to Shark. He's the best. This is Tony Shark, man. Yeah, and he's in a lot of my courses, my fictitious character, Tony Shark. And we're doing a case study now in my MBA degree program on Shark virtual reality, which is why I have these. This is Tony Shark's product here. Okay. That's his VR product. Let's just pretend. And then here you have lesser known companies like Oculus. Like, what is that? And then down there you've got PlayStation, which is ridiculous because you have these big lollipop type controls versus my product with Shark virtual reality. Let's just pretend. Which you can actually use your hands to wave stuff around. And again, this is part of my venture capital bootcamp part of the MBA degree program, which we're doing right now. We're on class entrepreneurship semester 3, class number 4, E3-4. Yeah. All right. Okay. And then Vikas it has another question here. And Vikas earlier wrote, I hate myself, ... And I told you to contact me personally because I want to, yeah. And then you wrote here, sir, I always cursed me for not following my dreams because I don't want to beg money from my parents. Even I am hard at working student, but I waste my college life, just locked myself in a closed room. Vikas, send me a message over LinkedIn. I'm going to give you my MBA degree program and all my courses I've ever made and all my courses I'll ever make for you for free. Okay. And if I can humbly help you, let me know, please. And actually, I'm going to give you access to my platinum program for my MBA degree program so I can get a couple hours of one-on-one time with you as well. Okay. And we can do it over Zoom or in person even if you want. So again, Vikas, I'll remember your name. Send me a message over LinkedIn. Okay. I've got you covered. Thank you. And I will pray for you. And for me, what I do, and I'll get spiritual on you here for a second, I don't worry about business stuff. I worry about personal stuff sometimes, but business stuff I don't, because I tell myself, God already knows what's going to happen. And that puts me at ease. And I think if you worry too much, it's like I'm talking about myself. It's like you, Chris, you're questioning your faith. It's sometimes when bad things happen to me in career-wise, I look back and I'm like, thank you, God. Makes sense now. Perception becomes reality. With crisis comes opportunity. When life gives you lemons, you make lemonade. Yeah. And I remember years ago, because I was really depressed. I love my dada. Yeah, my mama too. My dad said, Chris, I want you to read the book of Job in the Old Testament. And it's prophetic because it's spelled J-O-B, Job. And I read it, and it's about this dude who kind of questioned his faith. And then bad things happened. And years later, he understood why, and everything was great again. So we're all in a different path in life. And I really do believe that when it comes to business and careers, with crisis comes opportunity. And you might not understand it now, but years from now you will, I promise you. And anybody that's ever managed anything has failed a lot. You know, for example, Robert Redford, the great actor, he was fired when he was younger by an oil company. Michael Bloomberg, who's a billionaire, the former mayor of New York City, he was fired by Merrill Lynch. Jay-Z couldn't get a recording contract with anybody, and he was a drug dealer to support himself. And so what he did was he said, screw it, and he started his own recording company. And so in hindsight, I'm sure he's glad that he didn't get a recording contract with other records companies. And I'm sure Jay-Z and all these wonderful people at the time, sorry, I got to wrap the call in a minute. Ignore that, please. But even wonderful people, like a lot of authors, like J.K. Rowling, as well as C.S. Lewis, who wrote The Lion, the Witch, and the Wardrobe, and also Agatha Christie. They all have one thing in common, which is they got rejected over and over and over and over and over again. But they just kept at it. And with frustration comes breakthrough. You know, and you got to fail a lot and fail fast. And as Dwayne Johnson, The Rock, said, when you got your back against the wall, there's only one way to move. And when you fail, there's a great speech by Denzel Washington, who's amazing. He said, you got to fall forward and keep failing over and over and over again. And last thing I'll show you to wrap up this webcast. Michael Jordan, he said, I failed over and over again in my life, and that's why I succeed. So don't worry. I promise you everything will work out. I want to thank you all for your time. This has been a really fun webcast. This is a little off center. Sorry. That's better there. Okay, good. I'll use this actually as the thumbnail for this week's. Yeah. So I want to thank you all for your time. This webcast will be transcribed within 24 hours. So what you can do is you can actually go to the description field of this webcast within 24 hours. And every question will be typed up to the extent that you can click and get the automatic answer in the video. So I want to thank you all again for your time. We do this call every Thursday, starting at 8 a.m. This is our 99th call. Next week is our 100th call. And so if you subscribe to my vlog, I'll see you tomorrow and every day because I vlog every day. If not, God bless you. Stay safe, stay healthy, stay happy. Spend time with your family. Have a great weekend. And I'll see you next Thursday. Thank you and God bless.